buying new, then I think 550 is a level to watch out as a breakout to initiate longs.
Okay, we've got Ajay calling us from Noida. Ajay, a very good afternoon to you. I believe you have a question on Trent.
Yeah, very good afternoon. Yeah, thanks a lot for taking my call. My question is on a trend. I have 25 shares with the 5120 rates. I'm a long-term investor. I would like to know more about is it the reason for a consolidation, because its ROC is still around 20-25%.
Correct. I let me get this correct. Your buying price is 5120, correct?
That's right.
Okay, got your question, Ajay. I'll take this up with Radha. I think a lot of investors have this question, right? But it has its own reason, because it was growing at 50%, has come back to that 19 to 18% mark in terms of top line growth, and that's why we're seeing that kind of pressure in the stock since the past couple of months. Your view on Trent right now?
So broadly, if I look at Trent has got valued more in terms of the high growths which are coming in. And primarily moving forward, the growths have got tapered down, and in fact, the management is also not guiding very high growth coming in. So I think that's the reason the whole stock PE went down, the valuation took a hit. So overall, that's the reason. In fact, if you look at the valuation, it's the reason the growth comes back, and in the same levels, it will be very difficult for the stock to move up ahead. So it's always advisable to take a call on this to that respect. But till the time growth comes back, it will be very, very difficult for a movement ahead.
Okay, all right. The next one is from Mohit, who's asking about GAIL. Wants to know if this is the right time to make an entry from a one-year perspective. Kunal, do you think that that's the right thing to do, seeing the charts? Kunal, your view on GAIL?
Certainly no. Even if I look at this counter from last 2 years to 2.5 years perspective and how it has performed, it's just significantly down, and it's showing clearly lower top, low bottom formation. For us to think of buying, the counter should be at least in the positive momentum. So I'll avoid this counter for now, and I'll request our viewer to stay away from it for now. If he finds any good consolidation for a month or two, then he can revisit the channel and ask someone who is available that time.
Right, okay, so that's the view coming on GAIL. But time for a rapid fire round. Kunal, you know the drill. Try to keep your answers as short as possible. Rather, try to keep your answers to just buy, sell or hold. The first one is coming on Reliance Infra. Our viewer Sunny wants to know if this is the good time to continue to hold the counter or not. Kunal, your view?
Certainly exit.
Okay, JSW Cement is the next one. Our viewer wants to know if you can continue to hold from a long-term perspective or book losses. Radha, your view?
Yeah, hold on. I think we should hold on.
Okay, Kim's Hospital bought at the levels of 737. The viewer Vasudevan is a long-term investor. Can he continue to hold, Radha?
Yeah, he should look at holding this year.
Sagility India, is this the right time to make an entry, Kunal?
No, again, avoid for now.
Okay, Tata Motors PV. Sushank Kulkarni from Mumbai wants to know if this is a good hold for the next 6 odd months. Kunal, your view?
Avoid, reinitiate, think of buying above 365.
Okay, the next one is on ONGC. The viewer wants to know if this is the right time to buy from a long-term perspective. Radha, would you recommend that?
Not really, because it's already moved in and there's a lot of things baked in, so no.
Okay, PFC 200 shares bought at the levels of 420. 6 to 9 months view on the charts. Kunal?
Absolutely hold. Add more above 430.
Okay, the next one is from Deepak, who's writing us from Bangalore, who wants a view on the pharma space right now. Kunal, anything that you're liking on the charts?
Glenmark is outstandingly performing and good strong counter. So think of buying near 2000 levels with the stop loss of 1900 and the target being 2300 to 2500.
Okay, Kala Mandir, that is also known as Sai Silks. The viewer Mahesh is holding 100 shares at the levels of 165. Wants to know if he can continue to hold or maybe average out at the current levels. Kunal, I'll stick with you for this one.
Definitely downtrend. Avoid adding for now. Think of buying above 110.
Okay, Bharat Coking Coal at the current level, should I accumulate more, is what Ishan Singh is asking. Radha, your view?
So we should hold on, not accumulate now.
Okay, the next one is from Pawan, who's writing us from Hyderabad, asking about REC from a long-term perspective. Is this a good hold, Radha?
It's a good hold, in fact, I think Madhya is coming, yes.
Bajaj Electricals is the next one. Our viewer Kanchan has bought 252 shares at the levels of 495. Wants to know if she can continue buying this in SIP format. Radha, I'll stick with you for this one. It's been buzzing on the back of induction cookware selling. Do you think that's the right thing to do?
Yeah, so I think this sector will still continue and should do well. One should add. Yeah.
Okay. Transformers and rectifiers or ABB India, which one is a better placed in terms of fundamentals right now, and which one should our viewer pick, Radha?
ABB is between the two.
Okay, Vijay wants to know if this is the right time to invest into ICICI Bank from a short-term perspective. Your view on this, Kunal?
The trend is absolutely down. Think of buying near 1230 to 1235 levels.
HDFC Bank bought at the levels of 916. Can I continue to hold this from a long-term perspective? Your view on this, Radha?
So I think there's a split of news, no. So as of now, if you ask me,
All
don't
right.
buy right. Yeah.
Okay, so that's the view coming in on HDFC Bank. But with that, viewers, that's all the time that we have on this edition of Fast Profit. Kunal as well as Radha, thank you so much for helping us answer all those stock-related queries. We were able to answer around 92 queries, combining both the morning show as well as the evening show. But completely out of time on this edition. Do stay tuned. India Market Close up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. Welcome. You're watching India Market Close. If you're wondering in this morning, would things get worse? Well, they have. They've gotten visibly worse over the last few hours. Clearly, the Middle East is setting itself on fire. The retaliation from Iran on oil installations has gotten worse, and that's what you're seeing on the screen. 660 points down, nearly 3% down on the Nifty. Key levels have been smashed through with the speed of a ballistic missile, sorry to say. You've seen the Bank Nifty 3% down, worse off. I mean, even an HDFC Bank alone could not have wreaked this havoc. It's clearly happened. The mid-cap 3% down. I want to pull up the India VIX, good indicator of the fear that's gripped the street right now. Even as you see the advanced decline ratio turning clearly bearish. This is a 20% uptick. India VIX is a gauge of fear in the market. It's at its peak. You're at 2246 right now. I mean, to say markets are in a bad shape would be a gross understatement, Alex.
No, you said it. And I think it is primarily on account of the escalation that is taking place overnight, as well as what is currently taking place. And I think Brent crude is one barometer that is causing a lot of people to worry, because yes, Brent is now at 117 or thereabouts, once again 116, heading towards that 120 mark. But really, the price on the ground and the price in the UAE, in the Gulf, has already hit that 140 level. The physical crude has already hit that $140. So the question is, how much of that impact is going to be seen? And more than that, I think the worry, Tamanna, is how long will we have to face this? Because oil infrastructure is getting damaged, oil upstream infrastructure is getting damaged, and this is not something that you can replace in a matter of days and weeks and months. It takes years to put that together.
No, clearly this is self-destruct mode, which is going on right now for the core of the world's oil source. Here's the recap of what's happening in markets right now. Nifty's loss today is bigger than the gains in the last 3 days. So you can actually wipe out everything that's happened in the last 3 days. It's hit the 23,100 mark and fallen below. It's its biggest fall since budget day. Only 2 stocks have gained in F&O. That's ONGC and Oil India, obviously, because they mimic crude prices going up. Geopolitical tensions for India and the HDFC Bank issue has dominated D Street. All major sectoral indices are in the red. Auto has been hit the most. India VIX, as we showed you, is again above 22, and signs of extreme volatility and fear are being seen. 23,000 is the support level that we need to hold on to for dear life on the Nifty. 23,200 is the intraday resistance if you see any buying coming in. I want to see if we can look at European markets, US markets, and pull up the crude again as well, and also the advanced decline ratio. Europe also seeing that red coming in, pretty much as India, I would say, in percentage terms. You are seeing that kind of a little less, actually. India's 3% or thereabouts. Brent also 116, as we saw, and US futures will also show some pain. 8% uptick on the Brent. US futures also in the downtick. So it's going to be a tough start. We're also, of course, going to get all of our guests in, but Neeraj joining us remotely. Neeraj, you've been speaking to investors, you've been speaking to market participants through the day. Are they seeing no redeeming feature right now? What happened to the optimism of the last 3 days?
Yeah, gone with the wind, isn't it? I heard you say, Tamanna, that the fall today is larger than the gains for the last 3 days, and doesn't surprise. I was talking to Neelkan Mishra of Axis just a few minutes ago, and one of the views that is in the market is that maybe this conflict now involves equity markets and risk assets as well. And unless risk assets capitulate, this conflict may not quite see the end, because in some sense, while Indian markets have corrected and a few others have, US hasn't, right? While crude has flared up, US markets haven't really meaningfully corrected. So are we waiting for that capitulation phase to go by and work out once before the markets bottom out and some event were to happen? So again, it's a theory, right? The other theory, of course, is that a lot of sectors are throwing up companies which are at the valuations that you always wanted to invest. The only question is, do you have the gumption to invest right now and see another 5, 10, 15% deterioration? So I think it's case to case. But frankly, guys, I'm just happy that for the last 3 days as well, while the markets were rising, we've consistently told people that this is not predictably the end of it. So don't count on this being the turn and that the markets having bottomed out, because today has shown that there is no certainty to the bottom while the conflict is on and oil has flared up. I mean, and some of the tidbits that I've just mentioned are things that I've picked up from a whole host of investors that we've spoken to here at this event.
Absolutely. So definitely the mood has turned for the negative. Pull up the Nifty heat map, because the last I checked, there was just one stock that was gaining, and I think that's ONGC. And I think that continues to be the case. We're pretty much at the low point of the day. Look at the heat map for the Nifty 50. That indeed is the case. 1.3% or thereabouts for ONGC. Shriram Finance is the worst performer. HDFC Bank has actually clawed back some ground that it has lost, and it's still losing 4.4%. That's saying something. Chandan Taparia joining us this afternoon, Head of Technical and Derivatives Research at Motilal Oswal. Chandan, it already is the worst month since COVID-19, and we're plumbing new lows. The question is, how do you adjust strategy at this moment?
Good afternoon, Alex. Thanks for having me. So we have seen surge in India VIX by 20%, and now VIX is near 22.5 levels after the decline of last 3 days. The market witnessed recovery in last 3 days, but again today it opened negative and witnessing sustained selling pressure for most part of the day. So as of now, the structure is weak as we are making lower top, lower bottom on the weekly chart. And what we noticed that in weak structure, market witnessed bounce and again selling has started, which clearly indicates that as of now, some more weakness could be there in the market. However, it would be very tough to find the bottom in this scenario because the things are dependent on geopolitical concern, which is not ready to cool down. So I believe market needs to negate the lower top, lower bottom by surpassing an immediate hurdle zone. Till then, it's likely to be in negative to range bound mood. If I look on the downside, I believe 22,800, 22,500 could be the support. But the important part for the index is to cross and hold beyond 23,333. Then only the stability will be there for a 300, 400 point bounce. So as of now, the structure is weak till market doesn't give a clear sign of stability. Better to be cautious, keep the position light. And I think that is the only right advice at this scenario. However, because of this, the crude prices are likely to inch higher. So because of that, selective companies which are crude oil beneficiary could do positive, whether we talk about oil exploration company or power and energy companies. So we need to focus on that as of now in this scenario.
Chandan, and good afternoon to you. I was remiss not wishing you, but what individual stocks are you looking at? So therefore, would those upstream oil companies be the ones to look at if you were to go out and buy something? Are you also initiating certain sell calls?
Yes, Alex, we are initiating certain sell call because the advanced decline ratio of market is negative. Many stocks are declining. In fact, the 90% stocks are on the declining side compared to the advance. If I look at the data setup, Nifty's put call ratio is continuously falling down as we are witnessing sustained call writing. India VIX has seen a spurt of more than 20%. FI's long short ratio is declining with sell from FI. So all these data setup are indicating slight negative bias or upside seems to be kept or bounce could be sold as of now. If you ask me on the negative idea, we have negative stance on most of the tech companies. After the recovery of last 2 days, most of the counters are again on the negative side, making the lower top, lower bottom on the daily and the weekly chart now. Oil marketing company could be in focus. Counter like BPCL could continue to see more pressure. Already it has been making lower top, lower bottom from last 13 days. So BPCL with hurdle of 295, it can go down to us 278, 270. Financial counter could be in focus on the negative side. We have seen a negative price pattern in counter like Bajaj Finance, Bajaj Finserv. So most of these stocks are likely to see more pressure. Now, if we need to talk about the positive, I believe crude-related companies, ONGC, Oil India could be in focus. I can suggest to buy on Oil India with the support of 462 for an upside target towards 495 to 500. And apart from that, power counter could be in focus, whether we talk about NTPC or Tata Power and Power Grid. But let me tell you frankly, till market doesn't recover it would be tough to get the recovery even in the counter which are holding the strength.
Chandan, stay on with us. We must talk about the stock of the day, and it's HDFC Bank. HDFC Bank will be holding a media call on the chairman's resignation and, of course, Keki Mistry coming in as interim chairman for 3 months. A lot has happened since this morning. Well, let me go across to Hiral, who's been tracking the story, just to talk about why this is the stock of the day. And is it fair to say that the recovery which we've seen is also now under a bit of a question, Hiral, as the mood of the market turns?
Absolutely. The recovery is questionable right now. And what's happening is in terms of the commentary that is coming in from both the sides, from the chairman who's exited and the new people that have come on board as well. But clearly, you know, first up, we have Atanu Chakrabarti, who stepped down with immediate effect, as we already know about it. Apart from that, the RBI has gone ahead and approved the appointment of Keki Mistry as interim part-time chairman. Somewhere the commentary does say that people are happy with Keki Mistry coming in, at least for the interim. They're wanting to know as to what happens after 3 months. And he has been appointed for a period of 3 months, effective the 19th of March, which is yesterday. Let's quickly look at, you know, what the exiting chairman had to say. He said that the certain things that have happened and the practices within the bank, they are the ones that have been observed over the last 2 years, which do not really align, or they are not in congruence with his personal values and ethics. And this is the basis of his decision. This is from the letter that he has put out. Apart from that, what he's indicated is that he joined the board of HDFC Bank in May 2021. And his tenure on the board has seen some momentous events like the merger of the bank with HDFC that has actually created the second largest bank as well. And the strategic initiative made by HDFC Bank, as I mentioned, is the second largest one. Moving on now, let's quickly understand, what happens from here on, because a crash in terms of HDFC becomes very important if you have to ascertain the impact. On Nifty 50, weightage is around 12%. On Bank Nifty, around 19 to 20%. And hence, you've seen the kind of reactions on Nifty and Bank Nifty as well. Moving on, let's quickly look at the performance. On a YTD basis, in fact, this would have deepened further. It was almost 15% before the fall. Now the cuts have further gone down. So again, it's almost a 20% decline that you've seen in terms of HDFC Bank on a year-to-date basis. Let's understand what brokerages also make out of this, because before brokerages, I did get an opportunity to speak to Atanu Chakrabarti, where he said that the organization is something which he has nurtured for 5 years, and he's not pointing out to any wrongdoings at the bank. That's a very strong statement that has come in, and his ideologies are the ones which have not matched with the organization, and hence it was time for him to part ways. Basis this statement, you did see some bit of a recovery that did come in the morning as well. But let's quickly look at what brokerages are making out of it. Kotak Securities, they've maintained a buy. Their target is 1,050. They're saying that the interim leadership is the concern, but the uncertainty persists. Valuations have already been derated for HDFC Bank. And from here on, they're expecting a recovery which will be slower than expected. Moving on in terms of other brokerages, let's quickly look at what are they saying. If you have to look at the next one, if I can just get that on the screens, JP Morgan has maintained a neutral. They're saying that this adds to the macro headwinds from here on. Apart from, the chairman exit, what they're looking at is that the sentiment which has been hit will create that near-term volatility that we've already seen on the stock. It could actually widen the governance risk premium which has been embedded in terms of the stock price already. And the scope for near-term weakness is absolutely high for HDFC Bank. Very lastly, if you have to look at a UBS as well, let's look at what they have to say, because majority of the brokerages are still fundamentally positive. They're just talking about the near-term pressure on the stock price. Likewise with the Citi, and if you have to look at a Macquarie as well, where the notes have just come in, Citi is saying that the development coincides with the MD and CEO reappointment as well, which is due on the 26th of October. This is very important that they're highlighting, and they're saying that the heightened investor focus is with regards to continuity. Macquarie, also a very similar view that is coming in, where long-term fundamentals do remain on track, but they've removed HDFC Bank from a marquee buy list. That's what we're picking up from brokerages as well. And I think it's divergent views, Tamanna and Alex, that we are getting so far, where the pressure is in the near term. Longer term prospects, business prospects, people are not really worried about.
I think we should also have some sound bites from the investor call this morning, and we'll get that up for you from Shashidhar Jagdishan and Keki Mistry, who's also spoken in that investor call and tried to douse some concerns. Deepak Shinoy, CEO of Capital Mind Mutual Fund, joining us this afternoon as well, someone who tracks banks very closely too. Deepak, were you as startled as everyone else when this dropped in on phones at about, late night actually, 10:30, 11 in the night? Were you as startled? Because now in hindsight, a lot of people are saying, oh, we heard there was trouble brewing. But frankly, I don't think this was priced in at all. If there was a spat between the chairman and CEO all this time.
So, Tamanna, I can't, specifically comment on stock and all that. But in general, news like this is always startling unless you're the person who's written that email, right? So I think, I have no other info than than anybody else here. But I think it was surprising. But by and large, I think the bank in concern has been addressing queries all the while. It is a little disconcerting when somebody leaves these wake post kind of messages on I understand the need for not elucidating in public, but to give something like this and then not have anything backing it up in terms of even RBI had to clarify and all that. So it's a little disconcerting because everybody reacts in sudden like as if everything is wrong here. But I would say if there's something, then people should have an investigation. If there's not, and if the person in consideration has said, I might have used stronger language than I wanted to, or something like that, then eventually things should roll back. At this point, unless there is any more evidence of anything, I think it's very nice as a conspiracy theory. So it'll keep people occupied for a long time just talking about it. But, there's no substance beyond what's.
Would you buy a stock which has so much news flow around it?
If there's a fundamental reason why something is wrong, then perhaps no. But if there's no fundamental reason and you got these, a lot of companies had IT raids also. Then you found out 3 months later that nothing came out of those IT raids. They couldn't find anything. So would you sell just based on the IT raids? Not anymore. I used to do that earlier. And now I'm like, okay, IT raids are just, they're just doing it for, I don't know. There's a minimum number of 8 raids you have to do for high profile companies.
To fill quotas. Okay, the only difference is that that's something happening from an external government party who's doing it to everyone. This is an internal implosion. I'm going to come back to Deepak on it. Just quickly going across to Sumit Sarkar, because remember, we want to cut in to that media address by HDFC Bank as well. Sumit, what are you hearing on the street today? Apart from wails and screams.
Few stocks actually that dealers have highlighted. Firstly is Manappuram Finance. Post the RBI approval that came in, dealers are now expecting that there could be a revision in the open offer price. Now, Bain Capital's open offer price post the acquisition was announced stood at close to 236 rupees as compared to the current market price, which is anywhere between 265 to 270. And dealers are expecting that the new open offer price would be at a premium compared to the current market price. So keep an eye out for that counter. Thomas Cook, there's a board meet tomorrow to discuss corporate restructuring. Now, the buzz on the street is that there could be a potential demerger and separate listing of Sterling Holidays Resort, which is currently a subsidiary of the company. And lastly, when it comes to Suzlon, there are buy flows on large HNI desks. Dealers are expecting some positive news flow here as well. So keep an eye out for Suzlon in trade.
Positive news, Swamit, I hope that actually does move the needle, because right now everything is losing ground, irrespective of whether there's positive news or not. And that's really the question that I want to ask Deepak very quickly. And Deepak, we might have to cut you short because the press conference is expected to start anytime now. What is the market pricing in right now? Because clearly there's been an escalation overnight and there's worry about the destruction of key infrastructure, oil infrastructure, which could cause the supply issues to persist for much longer than was initially thought about. Is that what is being priced in?
Well, I don't know if it's priced in, but it's all uncertainty out there. It's going to take some time for us to evolve. There are challenges in supply. There are challenges in pricing. We will struggle through the next maybe 2 weeks at least until there is a coming back of that supply meaningfully to India. And because the world market is also so, fluid, you're not going to be able to get, at least the oil supplies will be a challenge. So we should assume that there will be some factory shutdowns, there will be some slowdowns in logistics going for the next 2 or 3 weeks. Earnings for this quarter are not going to be that great. Earnings for the next quarter might also get impacted. But once the war subsides, then things start looking good. The markets, at this point, just reacting to the news, I think. But, if you're looking 3 or 6 months later, then you should get better prices, which you're getting right now. You're getting better prices than a couple of days back. So in some cases, there will be good entry points. In other cases, I think the entry points will come over the next two months. So I don't think the market's pricing a doomsday. So if it's not a doomsday, then it's, a good long-term story to kind of allocate to, but not all just today. I think do it over the next 2 or 3 weeks, maybe even 3 months to a year for the retail investor, because you don't know where the bottom is.
Chandan, I want to quickly come to you on the Nifty. I think 23,100 also gone now. The way key support levels have been smashed through is alarming. There seem to be no buyers. Where is the bottom?
Yeah, it's very tough to find bottom in the weeks of 22. As of now, the index has been making lower top, lower bottom. So the first immediate small support could be the low made 3 days back, that is near 22,955. But meaningful supports are now directly coming or heading towards 22,500 to 22,200 marks.
In terms of any opportunities, maybe not today. I don't know if you have a buy call on anything today, Chandan, but would you earmark certain segments of stocks and keep, which you think deserve to be treated better? For example, is Shriram Finance, along with all the HPCLs and Petronet LNG, and you can understand why those are falling. Shriram Finance has taken a 6.5% knock today. Is that something which would be on your shopping list? If not today, but a possible shopping cart, like all of us fill our shopping carts on our apps with things we don't buy immediately. What would be in your shopping cart right now?
Yeah, Tamanna, this is a fantastic and interesting question, and I'm sure each and every viewer is looking for such kind of reply. Yeah, so to reply on the same, I'll give few sector and stocks to keep on radar. First, I'll focus on the capital market theme. Few name, whether we talk about BSE or MCX, I'll keep on radar. One stock from PSU Bank, mainly the SBI, I'm looking for any kind of decline towards 1,000, 1,020 to accumulate this counter. So 3 name I discussed. One is the BSE, any corrective move towards 2,600 is the best buy. MCX, any correction towards 2,400, 2,350 is best buy. SBI, any decline towards 1,000, I'm looking to grab. And apart from that, I'll also look at the selective metal counter. Hindalco, if comes near 850, 870, I believe it's a good trade as well. And then you cannot miss counter from Power Counter, whether NTPC, Power Grid. So these are the couple of ideas or stocks I have on my radar or watch list. Once the correction happen or some more decline happens, I think that can be the attractive idea in this market scenario to generate the alpha as per the technical and derivative setup.
Okay. The question is relevant to you as well, Deepak. From a fundamental standpoint, there are clearly certain sectors in stocks, companies that have a sensitivity to crude oil prices, and therefore there are going to be implications for their financials. But equally, there are other sectors in stocks and companies that don't have that impact. Talk about certain material companies, talk about certain commodity plays, talk about your power generators, your transmission companies to a certain extent, right? So what would you say are relatively insulated right now?
I think some of these are, but in the end, it depends on what price you're talking about. If crude goes to $200, everybody's affected. At 110 or 120, we've seen these prices before. Just 2 years before, we were paying $129 on average on a monthly basis for 3 years before, or 4 years, 2022, when the Ukraine war broke out. It was $120, $130. We were paying $140 in 2008 or something, or 7. So there have been these spikes that have come in the past. We have seen them. And if you say there is a benefit, it has to be that this price of oil has to be this high for the next 1 or 2 years. And it's almost never happened. Prices of oil go up and then supply comes through, and these issues kind of change, and then we go back into the earlier pricing. So if it's a short-term dislocation, then any company may have a short-term problem, whether it is in the paints business, whether it's in the synthetic tires business, synthetic crude for rubber, so for the tires business, that have indirect impacts. Downstream, it could be logistics costs, even for materials companies, and those also can change over a period of time. But I don't think, unless this price remains this high for a really long period, even the government will be loath to change the petrol price you're paying at the pump. Which means inflation may not look so bad, and the impact may not look as bad for many of these sectors. So unless you're directly impacted, or your raw materials are linked to crude, you're a plastics company or an airline whose significant cost is fuel, I think those are the companies that are directly affected. The rest of them are all downstream. Even the IT companies, you can say, will get affected if they have to, everybody else's costs go up because fuel costs go up, and therefore somewhere downstream there's an impact, but they are very low down on that impact. So I think apart from the companies that have direct impact on on crude, plastics, airlines and so on, I would say most of the other companies are not directly impacted by it. But at an extreme, everybody is.
All right. So, but let's talk about also exporters, right? Amid the Middle East crisis, the government is taking appropriate steps to provide relief to Indian exporters. The Director General Foreign Trade Chief also highlighted in a press conference that the government has issued directions to the exporters in view of that crisis. Listen in.
इस स्कीम को सर हमने नाम दिया है रेजिलियंस एंड लॉजिस्टिक इंटरवेंशन फॉर एक्सपोर्ट फैसिलिटेशन। जैसे कि आपने बताया, ये स्कीम एक्सपोर्ट प्रमोशन मिशन के अंतर्गत एक फोकस्ड वे में टारगेटेड टाइम लिमिटेड इंटरवेंशन के रूप में हमने एक्सपोर्ट प्रमोशन मिशन में इसको इनिशिएट कर रहे हैं। इस स्कीम के 3 कंपोनेंट हैं। वी वुड लाइक टू ब्रीफ दैट देयर आर वेरी क्लियरली डिफाइंड 3 कंपोनेंट अंडर दिस स्कीम। One is the component which covers a period of 1 month, which was the month when the war started. This is primarily focused on already insured exporters, यानी कि जिन्होंने ECGC कवरेज पहले से लिया हुआ है। दूसरा कंपोनेंट इज फोकस्ड ऑन नेक्स्ट 3 months, यानी कि वह एक्सपोर्टर्स जो अब एक्सपोर्ट करना चाहते हैं, दे वांट टू डू इट विद मच बेटर पीस एट देयर लेवल, तो हम उनसे रिक्वेस्ट करेंगे कि वह उस पर्टिकुलर केस में ECGC कवरेज लें और उस रीजन में अपना एक्सपोर्ट कर सकें। और तीसरी स्कीम जो फोकस्ड है, जो जब वॉर ब्रेक हुई उसके समय पर जो हमारे जो मटेरियल जो हमारा ऑन ट्रांजिट था, उस मटेरियल में अगर उन्होंने ECGC कवरेज सपोर्ट, इंश्योरेंस प्रीमियम सपोर्ट नहीं लिया है, तो MSME फोकस्ड, आई वुड लाइक टू रिट्रेट MSME फोकस्ड, हम उनको कैसे एक एडिशनल सपोर्ट प्रोवाइड करें, यह पर्टिकुलर थर्ड कंपोनेंट भी हम हाईलाइट करेंगे।
All right. So these are all moving situations, and we'll keep you abreast of everything that you need to know. In the meanwhile, Chandan, as well as Deepak, thanks so much for taking the time today. Pleasure speaking with you as always, and hope things get better really soon for the markets and otherwise. We have to slip in a very quick break. There's lots to talk about, so don't go anywhere. We'll be back before you know it.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
He has been tracking markets for over a decade, spots the trends before they hit the screen.
We also have other board members, Mr. M.D. Ranganath, Mr. Santosh Kesavan, Mrs. Renu Karnad, Mrs. Lily Vadera, Mr. Sashi Jagdishan, Mr. Bhavesh Javeri, Mr. Kaizad Barucha, Mr. Srinivas Rangan, and anytime we are expecting Mr. Harsh Banbala, Mr. Sandeep Parikh and Mrs. Sunita Maheshwari to join. The last 3 we should join soon, but we have the rest of the board members here. So without much ado, we'll hand it over to Mr. KK Mistry to get started. KK, over to you. Thank you.
Srini, and good afternoon, members of the media. I'd like to address yesterday's developments regarding the resignation of Mr. Tanu Chakraborty as part-time chairman and independent director of HDFC Bank. The board accepted his resignation and appreciated his guidance and contributions during his tenure. And honestly, on behalf of the entire board, we would like to wish him the very best in his future endeavors. Some of you were able to join the analyst call this morning, but for those of you who were not able to, I'd like to address all of you now. On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there were no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. Mr. Chakraborty was asked by members of the board what issues he had, to which he responded that he had no particular issue. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, the depositors, our shareholders, and all our stakeholders is totally and completely unwavering. The disclosure made is complete and transparent in line with regulatory requirements. The board and the management oversaw the largest merger in recent years in India's corporate history. The merger's successful completion and continued results have not only boosted the bank's balance sheet, but also given it a stronger presence in key products and services. The merged entity continues to build on its shared values and realize the full potential of its market synergies. The board remains firmly committed to safeguarding institutional resilience and investor confidence. The HDFC Bank board operates with strong governance standards, robust internal controls, and a very experienced management team who have been in the bank for a number of years and probably decades. Our strategic direction, business priorities, and execution capabilities continue to remain as always. The Reserve Bank of India has approved my appointment as the interim part-time chairman for a period of 3 years, and we are truly grateful for RBI's support and guidance at all times. Basis our periodical assessment, RBI has said that there are no material concerns on record as regards its conduct or governance. RBI has also stated that, and I'm quoting, sound financials, professionally run board, and competent management team. I would also like to say that the governance architecture that HDFC Bank has built over the decades is grounded in transparency, institutional integrity, and long-term value creation. We share strong value systems. I'm confident of camaraderie and collaboration between the executive management amongst themselves and the executive management with the board, so that all the goals and objectives of stakeholders are met in the best possible manner. HDFC Bank's culture is grounded in transparency, integrity, and long-term value creation. I remain confident of HDFC Bank's franchise. And I would also say that Shashi, Kaizad, Bhavesh, Rangan, the entire management team of the bank stands together and have been committed towards ensuring that the best standards of governance are always maintained in the bank. Lastly, for those of you who were not part of the analyst call this morning, I would like to reiterate what I said in the morning, that I would not personally have taken the responsibility if the bank's governance standards and ethos were not aligned with my values. And I truly believe that the bank adopts the best form of governance and ethics. So thank you very much. And Srini, now you can open the call for questions.
Okay, thank you, KK. Nirav, now can you please prepare the roster, and Madhu, you can coordinate the queue, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. A request to all the participants, kindly limit yourself to 2 questions per participant and rejoin the queue for a follow-up question. The first question is from the line of Ritu Singh from CNBC TV 18. Please go ahead. Ritu ma'am, sorry to interrupt you, but you're not audible. Hello, Ritu ma'am, can you hear us? Ladies and gentlemen, we lost the line for the...
Okay, we'll get you all of the details of what's happening there. Same story, nothing really has changed. Meanwhile, as far as HDFC Bank is concerned, meanwhile, what has changed dramatically is 23,000 has been lost on the Nifty. I mean, it's just it's a free fall at this point. There's just no gravity which is saving the Nifty at this point. I want to get Chandan in. I wonder if we still have Deepak with us. But Chandan, I just want to understand from you where we can find now the next move and some kind of support. In fact, I'm going to take that question with Avinash Gorakshakar as well and ask him what he thinks is a redeeming feature for the markets. Avinash, just very quickly, anything to save the situation right now?
I think, Tamanna, as you said, it's a free fall. And I think in this kind of market, it's very difficult to qualify as to where the markets would settle down. But 23,000 getting broken is definitely not a good sign. I think this was a level which was being monitored for a very long time. If we don't regain 23,000 on the closing today, then I think a further fall definitely can be expected. So I think you have got to just wait and watch. I think in this free fall, it's very difficult to visualize what level the markets could actually finally settle down and what kind of geopolitical developments happen in the next few weeks, at least on the weekend. So I think just wait and watch. We can't do anything more about it.
Expiry also playing out today, of course. Is that what is causing the elevated pressure on the downside, or is it more widespread? Obviously, it is widespread, Amit, but what are the reasons technically that you would ascribe to the kind of drop that we're seeing right now? It's not just one falling knife at this point, it's many.
I mean, good afternoon and thank you for having me here, Alex. It's not a great afternoon, but wish everybody a very happy Gudi Padwa from our side. It's actually a domino effect. If you look at
before you do that, let us also, Tamanna and I and the entire team, extend our best wishes, not just for Gudi Padwa. Of course, we have people in the country celebrating Ugadi as well, and it's a very beautiful, colorful celebration.
It's an auspicious change of season, new year. Let's hope for new starts as well, even as we do that. So, wishing everyone better luck and joy. Best to buy gold today, Amit. It's traditionally people buy gold. So, looking at what's happening right now. Amit, you've gone. There you are.
Yeah, hi. Can you hear me?
Now I can.
Yeah. So what I was saying is sometimes, I mean, if I have to really play against my own ethos, I would say sometimes FD looks to be the greatest option. Look at the way the markets are falling. But on a lighter note, the way the markets are falling, it actually presents an opportunity from a long-term investment perspective to, start accumulating a little bit in quality stocks. The impact of HDFC Bank has had a very strong domino impact on the overall market. I mean, as you've been discussing during the entire day, why Shriram Finance falling more than HDFC Bank when there is nothing untoward happening in that counter. So there are certain counters which are seeing a very sharp fall, and one needs to be a little picky, a little patient. But I think it's the darkest before the dawn, and things should look up very soon. If you look at the seasonality of the markets, technically speaking, April, May, and June have been more positive months. We have had more positive Aprils and Mays and Junes in the entire history of our markets as compared to negative months. So I do see that we could bottom. Hopefully we should be bottoming out. I mean, last 3 days move was looking like it was a bottom, but today's unpleasant surprise notwithstanding, the bottom should be close by, and we should start looking at accumulating from a more medium-term perspective.
Okay. Individual stocks then, Amit, in this context, it's difficult to pick, right? So therefore, would you wait on the sidelines or would you venture out and buy some things?
I mean, I would wait on the sidelines, but if I had to really look at, parking my funds and have to have an equity exposure, then the defensive or the value place would be the place where I would be parking my funds. And rather than stocks, I would be looking at more broader indices like healthcare, pharma, are the places where I would be, looking to park some of my funds over there. And instead of individual stocks, it would be more sector and thematic specific through a MF or something on those lines.
Okay, so pharma may be one of the places to hide. I like that Amit has brought some optimism to the conversation right now. The problem is that we've been through this cycle now so many times in the last few days that it's getting a little difficult to understand where this is ending. Avinash, a few days ago, the question was whether this would spread beyond the confines of the countries that are participating right now. Once it was clear that NATO, etc., are not joining this, it seemed like we were safer. But the fact that oil refineries, gas sites, gas fields are being attacked left, right and center, does this mean that we might see pain which is prolonged for some point? Would you look at an HPCL, BPCL in IOC in any form or fashion right now? And if you hold it, what would you do?
No, I think, Tamanna, fresh buying, we have been telling our clients to avoid, specifically the oil marketing companies. And I think, how bad the situation would get would depend on how long this war drags on. I think, next 3 to 4 weeks, if this war continues in the same momentum, then I think it's going to be painful for the Indian economy. I think gas prices have also gone up. We have just read that in Europe, gas prices have shot up. Oil has also crossed around $112 to $113 a barrel. Plus the rupee has now crossed over 93 rupees. So, these are obviously factors which are going to keep the markets depressed for some more time, unless we see some macro changes in these factors happening. And plus, today would be an interesting day today to see what is the amount of selling which has come from the FIs. FIs have been selling left and right. So today's number would be very important to watch, and what are the domestic mutual funds doing? Because today being a very big drawdown day, one will like to see these numbers. So I think, clearly fresh buying at this level is definitely not advisable. It's better to wait and watch. I think let the market settle down. I think there's no hurry. Entry points can definitely be made at a later point of time. So, in these kind of volatile markets when everything is confusing and, which is not improving, it's better to stay put and just observe the markets for some time.
Okay, couple of things happening right now, including a briefing on the Middle East crisis by the government. We've had some of those details coming in. We have HDFC Bank, which is holding a media conference, and we're covering what's happening in the Middle East. So we've got our attention in several places trying to understand what's the biggest factor in markets right now. As of this moment, we're looking at the energy crisis, which is flaring up. And, we've been reporting through the day about how ex-oil field and why gas field has been the target of a latest attack. But how much of that is what makes its way to India? Amit Sarkar with those special details. So Amit, if I had to look at it from the perspective of Indian imports, how much of the source of India's LPG is on fire right now?
On the LNG side, if you look at India's total LNG consumption stands at close to 54.4 million metric ton. And out of this, nearly 26.5 million metric ton is something that we import. That is nearly 50% is what the import is coming in. Now, out of this 26.5 million metric ton, 60% is something that we get from Qatar and UAE. Now, which means that Qatar and UAE form nearly 29% of India's total LNG consumption. So that's a big number that is coming in. Because of the recent attacks that have happened, this will get impacted and the issue could remain prolonged for few more months going forward. Now, what analysts are saying because of this is that irrespective of whether Strait of Hormuz opens or not, LNG supply will continue to remain impacted because it will take time to again start these new fields and refineries which have been impacted because of the war. And analysts believe that the lower gas supply or gas supply resumption or the lower gas prices is something that we will see only by the end of 2026 or in the first half of 2027. Now earlier, the assumption was that gas prices would remain on the lower side throughout 2026 and 2027, but this has now shifted, and lower gas prices, that is around $10 from current prices of around $20 that we are seeing currently in the Asian market. This will lower only by the end of 2026. Now, which are the sectors which or companies are stand to get impacted? Petro and LNG, the biggest impact, because nearly 60% of the volume are coming in from here to the Dahej LNG terminal. Apart from that, GAIL, because transmission segment would get impacted, marketing volumes would also get impacted. City gas distribution companies, IGL, MGL and Gujarat Gas, for them procuring gas will be quite expensive from the spot market. Fertilizer company, because nearly 85% of the gas requirement is met via imports. But apart from this, a host of other sectors that see a secondary impact, and they have been announcing about the same of late. Auto companies, auto ancillaries, QSR companies, cement, consumer, ceramic and EMS companies also stand to get impacted because of the LNG shortage, which is now expected to be prolonged going forward.
Yeah, right. Right. Thanks so much for laying that out for us, Soumit. In fact, let's talk about this in more detail. We're joined by Mr. M.K. Surana, who's former Chairman and Managing Director of HPCL. Mr. Surana, thanks so much for taking the time. The question to you, and you've seen conflicts in the past, but what we're seeing right now, at least to us, and we don't really understand oil infrastructure as well as you do, it seems like it's much more destructive, and that's why there is worry, as my colleague Soumit was just pointing out, that the fallout could take much longer to resolve than before. Can you explain to us from your lens, as somebody that understands how crude supply chains work, how bad is it right now?
Good afternoon, Alex, and thanks for having me on your show. So if you see last 20 days of war, so I see there are three stages, or there are different stages. In the first stage, when the people were thinking that it will be a quick and decisive war, short-lived, the Strait of Hormuz will not be blocked, the oil infrastructure will not be attacked, and during that time, in spite of the war, the crude prices hovered below 85. Then when it became clear that it is not that quick and is not in the visible, the objectives are shifting a bit, and the Strait of Hormuz were practically blocked, the oil crossed $100 mark. Now, yesterday, in last 24 hours, there is a new factor which has come in. So far, the assumption was that the attack on the oil infrastructure of the neighboring countries is more a collateral, or to prove a point, or to create a pressure point, or maybe accidental. But since yesterday, the way it appears is that the oil infrastructure is being targeted deliberately and to cause the maximum damage to the other side. And this brings in another element in the whole situation, because the earlier assumption was that once the war gets over, or if the supply through Strait of Hormuz starts through diplomatic means or otherwise, the oil supply or the gas supply situation will get normalized quickly. And during that time, people will be able to manage through the reserves and the release by IEA and other means. But when the oil infrastructure gets attacked, the problem is that it depends on how much the damage is and how long the war goes. But then you will need time to repair that, and some of the facilities may have the permanent or temporary outages. And that brings in another factor, and that is what is getting factored in the oil prices today, which has taken it, I think, since till the time I saw last, it was around $116. So the way it appears now, that now we can see two ways. It is a developing scenario. You may assume that it may come quickly and it may go longer also, but it can be seen in two ways. Either it is the last phase of the war, where everybody is trying to put the maximum pressure to cause the maximum damage to the other side, or make the maximum pressure to have honorable exit, or there is a persistence to drag it till the last. Now, it will depend on how the situation develops, and the oil prices will reflect that. But one thing, there is no doubt, the longer it goes, the cost on the economy will be disproportionately higher the longer it goes.
Mr. Surana, what is India's tolerance threshold for gas as well as for crude? At crude, we're at 116. More worrying seems to be gas. In your assessment, how much of the LNG that we import is on fire right now?
So I think I was just sharing that total LNG, let's say we import around 54 million ton and 50% is domestic, 50% is imported.
Okay.
And out of the imported, around 60% was coming from the countries which are affected by the Strait of Hormuz. Now the government has done the repurposing to prioritize the sectors, to reduce the thing where it is not supposed to go or there is possible. But the supply, especially after some of the oil infrastructures are getting attacked, that brings a new element in the picture. And because LNG was also acting as a substitute for LPG, so if LNG facilities get impacted, then it does create a stress on the LPG.
Mr. Surana, let me just rephrase my question. We're talking about how much comes from the Strait of Hormuz. That was a traffic jam in that sense. The way to bring in LNG was blocked. Here, the source has been attacked. So one can assume if key infrastructure has been damaged, and we still don't know the extent to which, it will take even more time to come online or come back in the same force.
So last one which is been attacked, it produces around, it handles around 77 to 80 metric ton of MTPA of gas.
So
okay? It's almost 20% of the LNG.
Okay. So
it depends on how much is the damage and which facilities have got damaged. That will depend on how much time it takes to come.
So it's fair to assume this is not something that can be fixed easy. If we had found a fix as a nation to at least some of those ships coming through the Strait of Hormuz through our diplomatic channels, that was one thing. We were beginning to do that. But here, if the source itself is under stress, then it's a different story altogether. What could that do to India's energy picture? Are there alternatives that are available?
Yes, there are alternatives in the sense that LNG you can get from US, you can get from Australia, you can get from Russia. There are other countries which can supply you LNG. So only thing is the time to come will be longer. That's one part, and the freight will be the cost. But right now, I think the important is to figure out the supplies rather than the price. And price can be handled, of course, in a different way. So there are resources available for LNG in the world. America itself is a big source of LNG supplies. Earlier, they had a constraint on the export facilities, but that also has been streamlined over the last 1-2 years.
Yeah.
So there are sources available for LNG in the world.
Sir, I just want to understand, and I think it's good signs that there are sources available, but there is such disruption to maritime routes, and this is ultimately how it is transported. And so from that perspective, what kind of lead time would be required for the government to arrange for these alternative sources to come through?
No, in fact, the LNG was coming from US otherwise also.
Okay.
Now, it depends on the time which it comes, the inventory which you have, and the next sources which come, because you have to definitely step up the supplies from the other sources, which otherwise would have been coming from the Middle East sources. And Qatar and UAE had been one major source of the supplies. That is one way. And the second thing is we need to see the alternatives, which government is already looking at it. In terms of usage, repurposing it, using the alternate sources of energy. One good thing for India is that in the power supply position, there is substantial part of renewable which has come. Otherwise, the stress would have been even greater.
Got it. Mr. Surana, thanks so much as always for taking the time. Really appreciate that you come to explain this to us and our viewers. Thanks so much for taking the time.
Thank you so much.
All right. Let me go back to Avinash on this question, which is that, okay, things are seeming a little bad right now. I mean, more than a little bad, because you have 23,000 that's been broken in the Nifty 50. The broader market's also losing ground. From a fundamental perspective, Avinash, would you hazard a guess, and not hazard a guess, but would you use a strategy to go on and buy the dip right now? Because it's always dangerous. People have done that through the crisis so far, and it's not really proven its worth just yet. So would you hold your horses? Would you wait on the sidelines, or would you go out and buy right now?
No, Alex, I think if I were to buy, I would buy largely the domestic facing sectors, not sectors which are anyway having any kind of connectivity with the crude or typically with the export oriented kind of rupee kind of issue. So I think domestic sectors like infrastructure, capital goods, hotels, hospitals. These could be good pockets where you could get good value. Companies like Apollo Hospital, Yatharth Hospital, pharma companies, these could be good defensive bets in this kind of market. But I think the broad sense in the market is that once 23,000 gets broken, there could be another wave of selling. And I think as everyone is aware, we really don't know how long this war will continue. Another 2, 3, 4 weeks if this war continues, which I think looks possible, then I think it's going to be definitely a bad period for the first quarter of next financial year. That is April to June. The January to March numbers may not be impacted. But I think corporate earnings also could get impacted. And that's probably the reason why, Alex, you're seeing banking also getting hammered, largely because banks are fearing that possibly their asset quality on the books could also get a little more deteriorated. So I think, you need to be a little careful. Even if you need to invest in this market, Alex, it's better that you don't use all your ammunition at the same time. Maybe you do a small, piecemeal approach and wait for the markets to settle down. That's the only way we can look at it.
From a very short-term perspective, and Amit, the question normally around this time is BTST. But what strategy would you employ today?
So if I have to stick my neck out and give a call on a stock, then I would say I would actually look for pockets of strength or relative strength here, because in this kind of a free fall market, there are certain pockets, like for example, NetWeb Technologies. Fundamentally, it is a very expensive stock, with P's in triple digits and all that. But if you look at the stock's price action, it has not really given away. And it is holding the 3,000 level quite smartly. So from a swing perspective, one could, look at accumulating a little bit of NetWeb, keeping a stop loss below 3,000 levels for possible targets of about 3,600 and 3,800. This is purely from a relative strength perspective and not really a BTST sort of a call.
Okay, I don't blame you. Tough to call a BTST. I mean, even if you see some kind of a technical improvement tomorrow, it's not one where there can be any kind of certainty, that's for sure. Though there is an important development tomorrow. After Ozempic's patent expiry in India on the 20th of March, the country's GLP-1 drug market is set for rapid expansion, driven by the entry of 50-plus branded generics from domestic pharma companies with intensifying competition and accelerating volume-led growth. What is this big shift and how is it going to impact the pharma sector? Varsha joining in with more.
Well, one of the hottest drug, that is semaglutide, the patent of this drug is going to expire tomorrow, that is 20th March. Now, what is semaglutide? Is nothing but an active ingredient which is used in Ozempic. Now, this is used in diabetes plus weight loss, and this will open the market to 50 plus Indian pharma companies. And if you see, GLP is one of the fastest growing segments globally. Talking about some of the history and for semaglutide, which is manufactured by Novo Nordisk. If you see, they have 3 brands: Ozempic, Wegovy and Rybelsus. Now, the semaglutide patent is going to expire on 20th March 2026. What does this mean? That 50 plus Indian companies will launch generics, price will drop sharply around 50 to 60%, and demand is expected to surge. Talking about the other GLP-1 drugs also, you have liraglutide, wherein this is manufactured by Novo Nordisk. Generics are already in line. For example, Biocon has started with liraglutide. You have dulaglutide. Again, Eli Lilly is the innovator. Generics, not yet. Depends on the patent expiry. You have tirzepatide, which is manufactured by Eli Lilly. Mounjaro and Zepbound are some of the brands. Generics are far away, considering this is the latest drug. Talking about what does this mean? This means that no sudden price drop, innovators continue to dominate, and gradual opportunity for Indian players when it comes to other GLP drugs. Now, talking about who will benefit, the big beneficiaries when it comes to GLP-1 in Indian markets, you have the likes of Dr. Reddy's, Sun Pharma, Biocon, Lupin. Every other pharma company will be launching the generics of semaglutide. Now, also the API manufacturers The CDMO companies like Divi's, OneSource will also be beneficial of this. Distributors and retail pharma networks will also be benefited from the GLP-1. Lastly, if I were to talk about the market size opportunity, it's growing rapidly globally. When it comes to the US GLP weight loss market, stand at around $127 million as of December 2025. Lastly, the very important one when it comes to Indians is the price sensitivity. If you see the innovator price, the main drug costs around 15,000 to 25,000 per month. But after generics come in, this is expected to drop. The price is expected to drop 50 to 60%. That is only 5,000 rupees weekly. So overall, considering the hottest drug when it comes to Indian markets, this will be a volume game for generics company and not a margin one. But yes, certainly, everyone is so excited because this is the next growth driver when it comes to the pharma companies.
Thank you for that, Varsha. And if you're looking for, I would say, defensive plays of safer kind of stories or investment ideas, would pharmaceuticals be one of them? I want to come to Avinash with that question. Tomorrow is actually a big day for the Indian pharmaceutical industry. Is that a play that you would be interested in looking at right now, Avinash, notwithstanding what's on the screen?
Yeah, I think, companies like Divi's Laboratories, typically something like Sun Pharma or maybe a Biocon, I think these could definitely be good bets. In fact, in a market like this, you could probably get these companies also at lower levels, and that definitely would play off in the near term. So yes, pharma is definitely a defensive space. And I think even the hospital space, Tamanna, as I was mentioning you earlier, this is a very steady compounding kind of space. Companies like Apollo, companies like Yathar Hospital, the hospital space is something which is growing quite rapidly. So this could be another area where possibly, the investors could see some amount of protection and where capital could grow at a decent pace. So, in this kind of market, it's better to play on something which is, more mature and going at a steady pace. I think, obviously the upstream companies like ONGC, companies like Coal India, even companies like ITC, these could also figure into the list. But I think you need to take a slightly longer term call because in this market, fundamentals are completely being ignored. I think the markets are purely driven by the geopolitical scenario.
Okay, talking about the geopolitical scenario, something very, very important on your screen right now, and we have to address it. All your updates coming in on NDTV Profit down there on the Middle East war updates. And from Bloomberg, Iran is saying they're working on a law to charge ships for Hormuz passage. Now, this is, it also makes sense, Alex, why there is so much of panic. I want to check the price of Brent if we can right now, US futures as well. Indian markets, I think there is just so much beating that any market can take, and Indian markets have taken a bulk of it. But you're going to see a deeper cut if this continues. This was a question that we've been asking. Has the Strait of Hormuz and the passage through it, the dynamics of that, changed forever after the events of the last 3 weeks? Because once Iran has realized that strangling the Strait of Hormuz gives it the kind of leverage which far outpaces its size, its power, its military operations, and its capabilities, why are they going to let go?
That's a fair point, at least in the short term, Tamanna. And I think that while this is something I think that if this leads to a cessation of the violence and a cessation of the targeting of oil infrastructure, at least in the short term, of course, it depends on what the cost is, but one would take this. And so, irrespective of what happens in the near term, though, I think the longer term question is, will the producers of oil, which is the Gulf states, be okay with that kind of a status quo, or will an alternative be created for this kind of a situation?
What is the alternative? You're the person standing there. Okay, it's a very maybe a bit of a stretch of an example, but sometimes when you drive out, you take these, if you are doing a road trip and you pass these little villages, little towns, you will have the local boys who are standing at the entrance to that space and asking you for a toll for anyone who's outside. They're saying, you're not from our area, to pass through, you need to give a toll. They're not licensed by anyone. You don't know where that collection goes. There is no accountability, but you pay it because, you need to get through. That's the only route. if someone has control of the Strait of Hormuz, are they going to let go?
Tamanna, you know, there's an even older story, and this is as old as time, as long as bridges have existed. There's a story about the troll under the bridge. The troll under the bridge seeks money for passage, right?
Yeah.
What happens to the troll at the end of the story?
No, I don't know if Iran is the troll, and if you want to do that comparison, because we're not taking any sides over here.
Sure.
But having said that, you have 12 nations, and these are Arab nations that have come together and asked Iran to stop bombarding their infrastructure and all of their installations, whether it's desalination, whether it's oil. Okay, you have the market close over there, but frankly, if the market closes 500 points down or 700 points down, beyond a point, it's the same extent of pain. The marginal pain is exactly the same. The tick you have to look at is Brent. The advanced decline ratio, dismal. The Nifty 50 close, really, I mean, you can feel happy it's not below 23,000, but it's seriously as bad as it can get. Bank Nifty in its own world of pain. I want to pull up Shriram Finance. For some reason, Shriram Finance is
7% down.
is getting hit even more than an HDFC Bank, one of the top losers on the NSE 500 as well. Nearly 7% down on Shriram Finance. And just to say, HDFC Bank followed a pattern of getting hit day after day after day before this news comes out. So I don't know why Shriram Finance is getting that kind of pain. The Nifty heat map will show you everything in the red. Maybe an ONGC will be in the green. Perhaps an ONGC will be in the green. I don't know if that really matters in the middle of everything that's happening. The sectoral heat map will also show you a lot of pain there. I mean, look at Shriram Finance, top loser, Eternal, HDFC Bank, okay, this is a different story. Bajaj Financial, the fact that all of your BFSI, PAC and your big ones are seeing this kind of pain after what's happening in HDFC Bank is telling me it's not as easy as saying that this is a problem between X and Y.
Yeah.
And they had an issue with each other, and they walked out, because what HDFC Bank is telling us today is that move on, there's nothing here to see.
Sure.
That's not what the screen is showing.
It isn't. And beyond that also, the other sad part is that you saw just a brief respite to the selling for 3 days, and that's been completely wiped out. It's like an ice cube in summer. It's melted completely. It's gone. But of course, we're going to take this forward over the course of this evening. There's HDFC Bank to talk about. There's geopolitics. There is everything that is emerging from the Middle East. You'll find all of the updates on the bottom of your screen and on live coverage through the day. But from Tamanna and myself and the team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. So markets have snapped out of its 3-day gaining streak with benchmarks losing over 3%. All the sectors have closed lower with auto as the top loser. Broader markets also reflects the fall in the benchmarks. And one stock that's been firmly in focus today is HDFC Bank after a sudden top-level exit. Now, HDFC Bank shares have tumbled after Chairman Atanu Chakrabarti has stepped down citing ethical concerns, sparking worries around the governance and also leadership stability. However, the RBI has stepped in with reassurance, stating that there are no material concerns on the governance, liquidity or capital adequacy, and also has approached the transition plan. Now, the street will now closely watch clarity on the leadership continuity and also the internal alignment. And the brokerage commentary on HDFC Bank continues to evolve with mixed signals coming in. Citi is maintaining its buy rating on the HDFC Bank with a target price of 1,200 rupees, but flags a near-term overhang. The brokerage says that investor focus is now shifting to management continuity, with MD and CEO's reappointment due in October 2026. And while uncertainty may weigh in for the short term, Citi expects operating performance to remain steady, with core metrics continuing to improve over the medium term. In fact, HDFC Bank is also seeing a shift in brokerage stance, with Macquarie removing the stock from its marquee buy list. And this move signals a more cautious near-term view, even as the bank remains a key player in the sector. While fundamentals may stay intact, the change could impact the sentiment in the near term. Investors will now watch for clarity on growth and also performance trends. In fact, Kotak Securities is maintaining a buy on HDFC Bank with the target price of 1,050 rupees, but also flags rising uncertainty around the leadership. Now, the brokerage notes that chairman's exit and also interim structure could really delay the recovery and also keep the sentiment subdued. While valuations have already corrected and appear inexpensive, Kotak remains cautious on any sort of near-term re-rating, and it says that a meaningful upside will depend on the clearer visibility and also more stable news flow. And whereas Brent crude is surging sharply, climbing to around $115 a barrel as tensions in the Middle East hit critical energy infrastructure, and the spike reflects growing fears of supply disruptions in a region vital to global oil markets. And traders are reacting to heightened geopolitical risk, with volatility expected to remain elevated. And this move could also have wider implications for inflation and also fuel prices globally. And oil marketing companies are under pressure as crude prices surge sharply. Shares of HPCL, IOCL and BPCL have fallen as much as 6%, tracking the spike in Brent crude to around $115 per barrel. And higher crude raises concerns over marketing margins and also potential losses for the OMCs. The sharp move is weighing on the sentiment across the energy pack. In fact, shares of Bikaji Foods are likely to remain in focus after brokerage firm Systematics Group initiated coverage on the stock with a buy rating. And the brokerage has set a target price of 750 rupees, implying an upside potential of around 22% from current levels. The stock had settled at 618 rupees in the previous session. Systematics remain optimistic on the company's growth outlook, highlighting its strong positioning in the ethnic snacks segment. It has also pointed to Bikaji's successful expansion into adjacent categories like sweets and Western snacks, which could further drive growth going ahead. Meanwhile, institutional activity is also picking up in the new age companies, urban companies in focus after SBI Mutual Fund has picked up a 4.14% stake in the company, acquiring over 6 crore shares, and this marks a notable institutional endorsement for the new age services platform. Such investments signal growing confidence in the scalable digital-first business models, especially in the consumer services space. And staying with the infrastructure, there's strong order flow momentum coming in. Shares of Hindustan Construction Company were in focus after the company secured a significant infrastructure contract valued at approximately 1,662 crores from Brihan Mumbai Municipal Corporation, that is the BMC, for construction of Goregaon Mulund Link Road Phase 4. So the project has been awarded to Akshaya HCC joint venture, which is in which HCC holds about 49% stake. So this order win comes as a positive trigger for HCC, reinforcing its position in the infrastructure and also construction space. First, shares of Butterfly, Gandhi Mati Appliances and also Stovecraft will be in focus after A sharp rally of up to 14% was seen even as broader markets remain under pressure today. The surge comes amid a spike in demand for induction cooktops and also electric cooking appliances driven by concerns over LPG supply disruptions linked to the ongoing Middle East tensions. And with households and commercial users increasingly turning to alternatives, companies in the kitchen appliance segment are seeing a strong demand uptick. And this shift in the consumer behavior is now translating into the investor interest, making these stocks key ones to watch. And Bharat Coking Coal is in focus after reporting a record operational milestone. The company has achieved its highest ever single-day coal booking, clocking 2.36 lakh tons in just one day. Now, the strong performance underscores robust demand for coal and improved dispatch efficiency at the company. So, the milestone is also seen as a positive indicator for the broader coal sector, reflecting steady consumption trends and also operational momentum. Let's look at some brokerage notes now. Citi is upgrading Dr. Lal Path Labs to a buy and also raising the target price to 1,650 rupees, citing improving industry dynamics and also steady growth visibility. The brokerage expects double-digit revenue growth supported by expansion into smaller towns and also a better product mix. Margins are likely to stay strong, backed by operating leverage and also cost efficiencies. Citi also highlights a strong balance sheet but flags volumes slow down as a key risk. And according to sources, India's export numbers for March are likely to come in slightly lower than last year, with the dip attributed to global geopolitical disruptions, including the ongoing Middle East conflict. Now, the government is working on the additional support measures for exporters, especially in areas linked to finance and banking. And on the trade diplomacy front, sources have said that India-UK free trade agreement could enter into force by April end or early May, while the India-EU FTA is likely to be ratified by November end. So, however, the turmoil in the West Asia has pushed back at other negotiations, with talks on GCC and also Israel FTAs delayed. The Oman FTA's entry into force may also be pushed back due to the current disruptions. And Commerce Minister Piyush Goyal, along with the Commerce Secretary, will lead India's delegation to the WTO's 14th Ministerial Conference in Yaoundé, Cameroon, scheduled from March 24 to 29. Sources are telling NDTV Profit.
All right, Mr. Shashidhar Jagdishan, the CEO of HDFC Bank, sir. I missed talking to you during the con call of media briefing. My first question to you is, how do you see this entire turn of events that have panned out and the impact on bank? All right, we are trying Mr. Jagdishan again, and we were discussing with him the entire turn of events that have really taken place at HDFC Bank, and in a long briefing to media, they have dismissed all the claims of any issues that really surround the HDFC Bank with respect to the relationship of the chairperson of the bank who has now resigned, and K.K. Mistry has come in as the interim chairman of the board of HDFC Bank. In fact, Shashidhar Jagdishan's tenure also ends in October of this year, and therefore the briefing also stated that NRC meeting will really take up and consider the matter of his reappointment as of October. Very soon is what's the word coming in. But remember that most of the brokerages have really stated that the concerns remain when it comes to the questions about the governance, and nobody is aware of the concerns because of which the chairman of the board had to really resign and also cast a shadow on the ethics as well as the values of the bank. So that is the question that the market is really looking at deciphering. So, Mr. Shashidhar, can you hear me, sir? All right, Himakshi, take it forward while we patch this line.
Yes, Nisha. So, you know, as you were about to speak to him, saying, you know, so HDFC, this whole shake-up that has, you know, come in about after the news coming in of the stepping down. So I would want you to just, tell our viewers about the background of it and what's the roadmap ahead.
All right. So with this particular resignation, it brings to an end a long-standing dispute which a lot of us corporate reporters have been aware of, the concerns that were there in terms of both the company's CEO, management, as well as also the chairperson. And those probably is really highlighted. And those concerns have been dismissed by the board and the new chairman of HDFC Bank's board. So at this particular moment, what we see is that RBI has already allayed fears of any concerns regarding the bank. Keki Mistry has come in as interim chairperson for 3 months, and probably his reappointment will be watched out closely. With that, we'll slip into a short breather on the show. Come back for more news and views on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Welcome back, viewers. Now here's an exclusive clip for my colleague Neeraj Shah's conversation with the ValueQuest's Ravi Dharamshri, where they talk about investing amid volatility and also the effect of the geopolitical risk on the domestic exporters. Let's listen in to that conversation.
Well, we are at Vantage, the annual investor day of ValueQuest. And it's been 15 years since they've been doing this, or 15 years of their existence, if you will. And I'm deeply happy to be talking to Ravi Dharamshi, founder of ValueQuest. Of course, needs no introduction. Ravi, great having you. And thank you so much for having us here.
Thank you, Neeraj. Happy to be here.
Yeah. Well, are these happy times to be doing this? Because I know public markets are actually fraught with a lot of risk. So it must have been quite something to pull off a private market event, get investors in and try and talk to them about investing risk capital. But what's your, and I'll come to that also, what's your general belief right now about how the investing sentiment currently in light of what's happening?
So it would be, one cannot say happy times for sure. And not only in the sense of from the investor's perspective, but just humanitarian crisis that is panning out. There are there's Pakistan-Afghanistan war going on, there's Russia-Ukraine war going on, and then now there is Iran-Israel war. So definitely not happy times. But see, from the perspective of capital markets, yes, this is their war, but it is our problem because it is leading to increasing energy cost. It is leading to supply chain disruptions, and we are heavily dependent on both of those. So it is definitely our problem, and markets are rightly reacting to it. So, however, every crisis is also an opportunity, and it also leads to pivot in terms of policies and strategies that governments of the day take. So this actually reinforces a lot of the themes, sectors that we have been talking about over the last 3-4 years, whether it is energy security, energy independence, whether it is supply chain resilience, all these things are coming to the fore even more with every passing event. And it just reminds us every day that we need to be far more self-dependent than really depending on the world. So basically it's a big world order that is changing. We are going from being a unipolar and a efficient supply chain world to a multipolar and resilience of supply chain is what we are moving towards, just in time to just in case. So yeah, I think that's the nature of the beast as of today.
Yeah, Ravi, in some sense, maybe, I don't know whether you preempted that or no, but the recent events from the last 4-5 years have reinforced this thing that every country will have to become self-sufficient in a lot of the domains, right? Energy, defense, space, whatever, all of those. Coincidentally, they are all here. So it's some sense, it's the best of both worlds. But you reckon that increased spends from governments and private players alike will be towards these themes?
No, absolutely. I think you covered it. Energy is not... it's become strategic. Supply chains have become strategic. Bilateral relations have become strategic. So, and somebody can use that as a geopolitical weapon against you. So, absolutely, governments must take steps to become self-reliant.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To to understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on
In a big jolt to HDFC Bank as part-time chairman Atanu Chakraborty resigns on ideological differences. KK Mistry says NRC to consider Shai's reappointment in due course of time. RBI clears no governance concern, approves exit post 5-year tenure. Stock price down, price recovers from 5% crash. Market snaps its 3-day gaining streak to end in the red. Nifty closes slightly above 23,000 levels after breaching the mark intraday, marking its biggest fall in 11 months. The Sensex plummets over 2,400 points. Crude boils after Iran set a ship ablaze off the coast of UAE and another one was damaged off Qatar. Brent trades above $115 per barrel. Saudi Aramco briefly halts loadings at Yanbu. Government announces 500 crore rupee relief package for exports in 3 parts, focusing separately on exporters that are already insured, upcoming exports to the region and on the MSME exporters not insured by the Export Credit Guarantee Corporation. Government says panic booking of LPG cylinders has dropped and only 57 lakh refill requests were received yesterday. Joint Secretary at the Petroleum Ministry Sujata Sharma tells the media that 70% of the country's crude is sourced from non-Hormuz routes. Maharashtra ushers in the new year with vibrant celebrations of Gudi Padwa marked by colorful rangolis and traditional rituals. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. And on to the top story of the evening. We begin with focusing on the HDFC Bank and also the resignation of the chairman of board. Now, the stock has although recovered but fallen almost 5% today. And this is in reaction to Atanu Chakraborty's resignation, from the board serving as non-executive chairman. And in his resignation letter, Atanu just, cited ideological differences as the main reason for his exit. And the bank has now appointed the old hand of HDFC, KK Mistry, as the interim chairman of the board. For more details on the resignation, RBI's response, and also the way forward for the bank's leadership, I'm being joined by my colleague, Nisha Podar. Nisha, over to you.
Yes, thanks for that, Himakshi. In a big development at HDFC Bank, well, Atanu Chakraborty resigned from the board, serving as the non-executive chairman. And also remember, the bank has appointed HDFC's old hand, Keki Mistry, as the interim chairman of the board. Now, in his resignation letter, Atanu, a former bureaucrat, remember, has said that bank's practices did not align with his values and ethics, which seemed to really cast a shadow on the bank's workings and governance, which was speedily rebutted by Keki Mistry, who lent his support to the management of the bank, aiming for stability of the systematically important bank. Now, the bank regulator, RBI, also was quick in really allaying any concerns or fears on the change, and also stated that there are no governance concerns surrounding HDFC Bank and that the RBI has approved the change in the chairmanship. So, as a way forward, we learn from sources that with the conflict between Atanu Chakravarti as well as the bank's leadership now being resolved, with this change in chairmanship, well, Sridhar Jagdishan's position at the helm of HDFC Bank really strengthens further. And also remember that his reappointment for the next term is due in October this year and to be watched out very, very closely. Now, remember that in the media briefing and the con calls, the management has clearly stated that the NRC committee of the board will be really taking up the matter of the present CEO's term to be extended, and that will be considered soon, while they have also dismissed any concerns of any governance issue at the bank or any issues that Atanu Chakravarti has stated. In fact, in the con call, they gave out a lot of details, both Keki Mistry as well as Sashidhar Jagdishan. Hear them out.
In any large organization, small issues will keep cropping up. And obviously, in an institution or in a bank as large as the bank, small issues do keep cropping up from time to time. But there is nothing substantive enough for to understand why Mr. Chakraborty resigned yesterday and issued the letter. And as I think some of the board members mentioned, they spoke to him repeatedly during the board meeting, saying that if there is an issue, please let us know, because we would like to address this issue right away. And his response was there was nothing substantive.
Viewers, stock markets have snapped 3-day losing streak to end in the red. While the Nifty has breached 23,000 levels, the Sensex has plummeted over 2,000 points. HDFC Bank's downward slide pressure the benchmark the most, with Bank Nifty settling with around 3% cut. Broader markets lamented in sync with the benchmarks too, with both the mid and small cap indices ended in the red. And also, as a matter of fact, none of the sectors made it to the positive territory. Let's get in my colleague Mahima to explain all the stock-specific moves.
Right, so overall it's been a bloodbath for the markets today. Nifty has fallen over 3%, went below the 23,000 levels, just bounced back a tad bit, 50 odd points, closed around that 23,050 odd levels, but the pressure continues, the volatility continues, and the VIX indicates that. Now overall, if you take a look at how the day has been, the Nifty has hit its lowest level since April 2025 today, the biggest intraday fall since April 2025, and has snapped its 3-day gaining streak. Shriram Finance and Eternal were the top losers on the Nifty 50, losing over 6% ground. And of course, HDFC Bank, being an overweight, did of course play its part in pulling the Nifty down today. Overall, all stocks were in the red, barring for one stock which is held throughout the day, that is ONGC. Broader markets also fell equally, slightly better in terms of where the benchmarks go, but the small cap 250 ended over 2.5% lower. Aegis Warpark as well as JBM Auto were the top losers on the small cap 250, both down over 6%. The mid cap 150 was down over 2.5% as well. Petronet LNG and Hindustan Petrochem were the top losers in the mid cap 150, both down over 7%. All sectors, of course, ended in the red. Nifty Auto, worst performing sector, fell over 4% in trade today, snapped its 3-day gaining streak. Ashok Leyland and M&M were the top losers on the Nifty Auto. Realty was the other top loser losing over 3.5%. Godrej Properties and Signature Global fell the most and snapped its 2-day gaining streak as well. The other sectors, the Nifty FinServ, Nifty Bank, Nifty PSU Bank snapped their 3-day gaining streak, and defense, pharma, oil and gas, energy also snapped their 2-day gaining streak. The metal pack as a whole ended for red second consecutive day, and FMCG ended in red for the third consecutive day. So this is the overall view. The volatility continues, and the VIX kind of indicates that. We'll have to wait and watch out for, and as Anders is saying, be cautious with regards to where the markets go.
Thank you so much, Mahima, for that market roundup. And viewers, Rajputana Stainless is also gearing up to make its market debut with its 255 crore IPO, drawing attention from investors tracking the specialty steel space. Now, the issue includes a mix of fresh capital and also an offer for sale with proceeds, earmarked largely for the debt reduction and also capacity expansion, including a new seamless stainless steel pipe facility. Our colleague Nimit spoke with CEO Yashkumar Mehta on the company's growth plans and also the road ahead for post-listing. Let's listen in.
First thing I'd like to ask you is, you've listed now. Do you think these prices can be maintained given the current market volatility? What is your plan going forward to maintain and grow these prices on exchanges?
Well, definitely. I mean, I'm very confident that we will be able to maintain the prices, and in fact, the prices may go up as well. The performance side of the company, we've been doing really well. In the first quarter itself, we've crossed 500 crore in revenue. So we are pretty confident on the future to come for Rajputana.
Yeah, perfect. Just to push you on that, you've done 502 crore, as I see already, which looks like a run rate annualized at crossing the 1,000 crore mark, right? Are you confident about maintaining this growth momentum through the year? And how are things looking so far? And what kind of challenges do you see going forward now that you're a public listed entity?
Well, definitely. I mean, we'll 100% ensure that we catch up to the run rate that we've been maintaining, and we'll 100% try to ensure that it grows substantially as well. Challenges, I would say, just the economic condition of the world, which is slightly not in the favor of the markets as of. But otherwise, I think in the long run, stainless steel is a product that will be required for each and everyone, and with so many things happening around the world, there'll be more stainless steel that will be required, and more buildings and more everything that will transform the future. So in the transformation of the future, Rajputana will be playing a very important role.
Sure, that's good to hear. Yeah, we hope that demand recovers as well. Lastly, I wanted to know that part of your proceeds, and you raised fresh capital about 179 crores. Part of that is going to be used for a new facility, a seamless pipes facility that's in the pipeline. I'd like to understand, what are the timelines for this pipeline? What does production value look like? What kind of growth potential do you see coming from this new facility?
So with the seamless pipes, we enter a B2C segment. We were primarily a B2B market, but now with the seamless pipes, we can, as a brand, Rajputana can come out as a B2C segment as well. And as you come to a B2C segment, your profitability increases, your revenues increase. So that is our focus, that we continue to maintain a momentum in the B2C segment and ensure that we grow further into the B2C segment with the pipes that we are coming in with. We're expecting a good revenue growth with the product as well. So hoping within the next 6 months we commence the facility and we start the production.
And viewers are looking at the Brent crude futures now. So they've rose again from $100 to around $115 per barrel this afternoon. And the over 6% upshoot was mostly triggered by the strike on the world's largest natural gas field, South Pars, that Iran shares with Qatar across the Gulf. Now WTI crude has surged close to 1% to $98 per barrel as well. And as per reports, among the first to bear the brunt of boiling oil prices are state-run oil marketing companies, that is the OMCs, whose marketing margins have come under immense pressure. And as a result, if you notice, the shares of BPCL, HPCL and Indian Oil Corporation all have fallen nearly 10% in the past 5 sessions alone. Now, most of these stocks are also hovering near their 52-week lows. In fact, Peter Maguire, CEO Australia of Trading.com, told us that the uncertain timeline of the war and also attacks on gas facilities is only going to send prices up north. Now, let's listen in to that crucial commentary.
The issue quite simply is how long, first off, is a time frame. Secondly, the disruption and hitting those oil production plants and what you've got across the whole of the Persian Gulf. And then how much higher can crude prices go for how much longer? That's the issue. And it just seems to be on a one-way trip at the moment, and that's heading north.
And the government is planning to launch a new relief package called Relief under the Export Promotion Mission to support exporters hit by disruptions in the Middle East. Now, DGFT Chief Love Agarwal announced this today in New Delhi, and the scheme has 3 parts that have been allocated different amounts. But before we get in my colleague Rishabh for all the details, let's listen in to DGFT Chief Love Agarwal making this announcement.
इसमें एक मुख्यतः जो हम बताना चाहेंगे अपने मीडिया फ्रेंड्स को कि जनरली ये माना जाता है कि ECGC कवरेज इज प्राइमरीली अगेंस्ट नॉन पेमेंट आफ्टर गुड्स आर एक्सेप्टेड. बट अगर हम देखें ECGC कवरेज डज नॉट ओनली कवर दैट, इट ऑल्सो कवर्स कॉन्ट्रैक्ट रेपुडिएशन, यानी कि अगर बायर एक्सेप्ट करने से मना करता है तो चाहे वो रीसेल हो, री इम्पोर्ट हो या डिस्ट्रेस सेल हो, उसको भी कवर किया जाता है. वॉर रिस्क हो, चाहे कोई हॉस्टिलिटी हो और उसमें वह प्रोसीड एक्सपोर्ट प्रोसीड अगर इफेक्ट होती है उनको कवर किया जाता है. ट्रांसफ़र रिलेटेड रेस्ट्रिक्शंस हो तो उसमें पेमेंट डिलेज हो या मॉरेटोरियम हो उससे भी कवर किया जाता है. और मुख्यतः डाइवर्जन ऑफ वोएज हो तो शिपिंग रूट चेंज अगर हो जाते हैं तो उससे भी कवर किया जाए. दैट इज़ वाई वी डिसाइडेड दैट वील गो थ्रू ECGC टू सपोर्ट आवर एक्सपोर्टर्स ड्यूरिंग दिस पीरियड, सर.
I'm now being joined by my colleague Rishabh Bhatnagar, who will break down what this relief scheme is all about. Rishabh, over to you.
Right, a pretty catchy name for this relief scheme that has been put out by the government. This essentially has 3 components. The first one has been allocated roughly 56 crore rupees. Under this, what you have is exporters who already have ECGC insurance cover. Those are covered under this. This is the smaller part of this very large package. What you're seeing is that the second component worth roughly about 160 crore rupees. This is what is ensuring that over the next couple of months is when you'll perhaps still have this situation, this geopolitical situation continuing. This component is what will enable exports to still go out and exporters to still not feel the pinch of increasing war risk surcharges and other sort of charges that have come as a result of this geopolitical situation. This has been allotted roughly 160 crore rupees, and this is for consignments that have that either will leave India or have left India between March 16th and June 15th. So 3-month-long window for this one. The third component is the largest one. You have about 282 crore rupees allocated to this, and this one is focused entirely on MSMEs. And this one has a cap of roughly about 50 lakh rupees per MSME. So you have some sort of a capping there that has been put out by the government to ensure that more and more exporters can get the benefit for this sort of a scheme. What we're seeing is that there's also an enhanced coverage under ECGC that the government is footing the bill for. So ECGC provides a cover of roughly up to 80 to 85%, but with an additional 10-15% that the government is footing the bill for, you have a cover that is expanded to 95%. So those are the basic contours. The total scheme allocation is roughly 500 crore rupees. So not a very, very massive scheme that has come out, but still a very, very timely scheme under the export promotion mission by the
chance of getting your answers on the record. I will ask you only 2-3 questions, the way everybody asked, right? So, Mr. Shashidhar, how do you as a CEO of the bank make sense of the turn of events and the way the brokerages and the market has reacted? As a CEO, what lies ahead in terms of the top priorities to recoup what is lost with this event, sir?
Number one, the fundamentals, the strength of the franchise, it remains intact. Okay, this is when I'm saying that, it is something that I mean it not just from a vantage point of executive management perspective, but also from the board perspective as well.
Right.
Now, the developments of yesterday, when the former part-time chairman has decided to move on, I think that was a little bit of a surprise for not just me, but for the entire board. Obviously, we've had a very constructive relationship over the last 5 years. He brought in a fair amount of intensity in terms of various aspects in governance, which is something that we have taken away rather positively, and therefore we insisted his continuation. But I guess he seemed to have made up his mind in moving on. So that's part one. Part two is obviously the insertion of those two lines has did create furor in our minds as well. And so every board member who you probably did hear in the call requested him to reconsider, especially since he did mention that there is nothing of any concern that he could share.
Right.
Now, obviously, this is a very strange situation to be in.
Yes.
It has created an impact in the market, rightfully so, because the people are far and wide across the globe, and anyone remote looking at it dispassionately without knowing the color behind the news will sort of will take positions either ways depending on what they see in black and white. But I think the kind of engagements that we have done since morning collectively as a board, as a cohesive front, I think should sort of minimize, because the truth and the substance of this is that we are an institution with a strong governance, with complete value systems at the top, and that is something that we're very passionate about, and we believe that everything else now is something that the performance will speak for itself, especially as we are on the cusp of coming out of the merger glide path. And I think this is a great opportunity for for anyone to be invested in this particular stock.
Right, you've given enough of these, pacifying and also confidence-building, statements, Mr. Sridhar. And now I want to ask you one important question that is about the concerns, because most of the brokerages have really stated that if only the concerns could have been really revealed, they would have understood the magnitude of the issue that may have been there. You have made many statements that there were no concerns, but there is one thing that we as corporate reporters have been really focusing on and really following, was that in the middle of last year, RBI had in fact informally also asked your chairman to avoid taking executive orders or involving himself in executive orders where there were some instances of clash with the management on strategic decisions, like even in your subsidiary, and what is the way forward. Can you highlight at least some part of it, and can you confirm if RBI has ever intervened on any such matter, either officially or unofficially, sir?
No, I would have no visibility of any of that, and I'm not aware of any such intervention by the regulator on any such matters. If at all, I'm sure the RBI knows how to sort of balance between executive and the board, and yes, they will. If there are excesses that I do or the management does, I'm sure they will reach out to me. And if there are something that the board does, I'm sure they will reach out to anyone else, including the chairman. So I don't have visibility of all whatever you're saying. But whatever it is, I think, the regulator probably knows how to steer financial stability. To ensure financial stability, they will do all the things that's required, both from a supervisory perspective and also from their own nudges, softer nudges. But the specifics that you did mention, sorry, yes. I have no visibility of the same, and I cannot confirm, and I'm not aware of the same.
So, Mr. Jagdishan, do we see you as reappointed come October? Is that process going to be put on fast track, given the uncertainty, and the bank really needs more confidence on certainty on the next CEO as well? Will you be willing to take up that challenge?
No, number one is, I have always said I'm keen. That's number one. But having said that, there is a fair amount of robust and a very transparent process which is undertaken by the Nomination and Remuneration Committee of the board.
That's right.
And which will then recommend to the board and then post that to the regulator for approvals. I don't want to cross that particular line in terms of saying that I would like to or I will be. I would like the process to take its own course, and then and if the process and the approvals come through, I'll be delighted. But as of now, I don't want to sort of second guess any of these authorities. I would like these authorities and the processes to take forward in the manner that we would like as a great governance company.
And how concerned are the FII shareholders? You have a large base of FII shareholders, and they are more critical about governance, especially of a bank.
Look, we are still engaged with him. I think we have come out very transparently. As I said, and Kiki Mistry just mentioned, if a person of that stature who shares a lot of great value system with the institution, with him on his own personal front, and where I also share similar such values, if he can sort of accept the position, which means that it's a testimony that the concerns are probably not there. And the outgoing chairman actually subsequently has mentioned the same today, I'm told, though I've been extremely busy in various calls. So I guess, you put all this perspective, you put the regulator's statement, which is another testimony of the strength of the franchise and the institution. I think all this just leads to the fact that we continue to be extremely strong franchise, well positioned for growth, especially in an economy where we seem to be extremely well positioned amidst the turmoil that's happening. The bank is also equally well positioned, just coming out of the merger. Yes. We have a surprise in form of technology over the next 2 years, how it can bring in a fair amount of efficiencies, and all put together, I think we seem to be on a roll. So
right.
I think
on a roll is what I will take as a very big takeaway. But PSL requirements, that really kicks in now as the merger process, and that is going to be a big task for the merger and the bank to really complete. What are the steps on that? Because that will give a lot of confidence and clarity about the merger process, which also Atanu Chakravarti in his letter alluded to. So PSL requirement, and how are you really taking care of that, sir?
priority sector requirement is a part and parcel of the business model of our functioning. Okay, so there are ways and means that we do. We do it organically. We also do some of the ones, especially on the small and marginal farmers. We do to the extent that is acceptable from a risk thresholds perspective. Anything beyond, we are happy to sort of invest in the RITFs or in some of the certifications that are available, etc. So the cost of this, I think, is subsumed, and so the financials that you see will between the 1.9 to 2% ROA subsumes all these things. So we are not overtly concerned. It's not just now, but even in the past. I think these are all have been factored in our plans and strategy. So I don't sort of call this as an issue at all.
Right, but macro headwinds are huge, and with this coming in, you will need double the amount of effort to recoup what is lost. One word on the stakeholders to be confident about it going forward.
No, I think, see, we have executed over 32 years a wonderful financial performance in multiple business cycles. The country over the last 15 years has been so resilient with so many external shocks that has hit. And so we are blessed to be in that kind of an economy which is strong and resilient. The institution itself is strong and resilient and at a certain scale. And so as the economy is on its way upwards, I think we should be well positioned to grab that kind of an opportunity like never before.
Right, and criteria for the next chairman position, is Keki likely to continue? Just my final
that whilst we would love to, but I think we would prefer this to the process that NRC has instituted in terms of the requirements for a full-time part-time chairman, which they will sort of have a certain process which needs to fall in line with the Reserve Bank of India requirements. And if Keki's name does sort of fit into that, I think we'll all be happy. If not, I'm sure there will be an equally compelling candidate, which the nomination and remuneration.
But given the past track record, the eligibility criteria will have to be much more sharply, articulated there, Mr. Jagdishan.
No, I'm sure they are well. We have some fantastic people on the board of the NRC who probably will have the gravitas to choose the right candidates, which befits the stature of the institution.
Right, but also rupee is depreciating. Okay, my final question on the economy, and this, if you can just give some clarity, with rupee depreciating, inflation going up, it could come to a discomfort for the RBI. Is banking, what all are the banking sector really bracing up for? You're a tall leader from the banking sector. What is it that you're bracing up for? And are we also looking at an interest cycle reversal if this war really continues? What are the pain points?
See, I think the Reserve Bank of India and there are a lot of other experts who have waxed eloquent on that particular subject very well. I think despite the kind of pressures that we have seen on the external front, I think the liquidity has been maintained very well. The financial system is at its benign best. So I think whatever the regulator has to do or the fiscal policy needed to be done, I think both have done extremely well in this kind of an extreme situation that we are being confronted. It's too premature to know what's going to happen over a period of time, but at least I can see in the shorter end, we don't see too much of an impact. In the medium to long term, too premature to even comment. But frankly, the economy is so resilient, and I keep saying that. I think amidst whatever is happening elsewhere, I think we are in a sweet spot as an economy. Both the fiscal and the monetary arms have demonstrated how well they have orchestrated their policies to ensure that the stability of the economy and the financial system it goes in tandem. So I'm not concerned. Frankly, these so-called movements up and down of quarterly variations is not something that we need to worry about. Look at the medium to long term. The trend is all upwards, and the expectation is also upwards. There are too many people, being very negative about it. I think we should be positive. We are an optimist, and we are extremely positive to be in a positive country. So I'm an India bull, so not to worry. I'm very happy about where we are heading towards and how we as an organization can grab that.
Right. Thank you so much for your time and patience with our questions, even in the eye of storm. Thank you so much for joining us with all your insight. Thank you so much.
Thank you.
All right, so that was the big discussion really coming in. And in the eye of the storm, at the current moment, as the leader of a large institution, he has really taken up this challenge in a very composed fashion, I would say. The biggest takeaway really coming in from this particular interaction with HDFC Bank CEO is that he is keen to really be reappointed come his tenure ends in October of this particular year, but he also caveated it by saying that there is a process of NRC committee and then taking the RBI's approval. So he will leave it to the processes. That particular certainty is very, very important. Since the morning, NDTV Profit has been saying that with the exit of the current chairman and that position being changed, which was a conflicting position with the management, the strengthening of the present CEO and the present leadership of HDFC Bank really means a lot for the 2.0 phase for HDFC Bank. I hand it back now. All right, I will slip into a short breather and come back for more news and exclusive news right here on NDTV Profit. Thanks so much.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations. Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
So, Mr. Shashidhar, how do you as a CEO of the bank make sense of the turn of events and the way the brokerages and the market has reacted? As a CEO, what lies ahead in terms of the top priorities to recoup what is lost with this event, sir?
Number one, the fundamentals, the strength of the franchise, it remains intact. Okay, this is when I'm saying that, it is something that I mean it not just from a vantage point of executive management perspective, but also from the board perspective as well.
Right.
Now, the developments of yesterday, when the former part-time chairman has decided to move on, I think that was a little bit of a surprise for not just me, but for the entire board. Obviously, we've had a very constructive relationship over the last 5 years. He brought in a fair amount of intensity in terms of various aspects in governance, which is something that we have taken away rather positively, and therefore we insisted his continuation. but I guess he seemed to have made up his mind in moving on. So that's part one. Part two is obviously the insertion of those two lines has did create furor in our minds as well. And so every board member who you probably did hear in the call requested him to reconsider, especially since he did mention that there's nothing of any concern that he could share.
Right.
Now, obviously, this is a very strange situation to be in.
Yes.
It has created an impact in the market, rightfully so, because the people are far and wide across the globe, and anyone remote looking at it dispassionately without knowing the color behind the news will sort of will take positions either ways depending on what they see in black and white. But I think the kind of engagements that we have done since morning collectively as a board, as a cohesive front, I think should sort of minimize, because the truth and the substance of this is that we are an institution with a strong governance, with complete value systems at the top, and that is something that we're very passionate about, and we believe that everything else now is something that the performance will speak for itself, especially as we are on the cusp of coming out of the merger glide path. And I think this is a great opportunity for for anyone to be invested in this particular stock.
Right, you've given enough of these, pacifying and also confidence-building, statements, Mr. Sridhar. And now I want to ask you one important question that is about the concerns, because most of the brokerages have really stated that if only the concerns could have been really revealed, they would have understood the magnitude of the issue that may have been there. You have made many statements that there were no concerns, but there is one thing that we as corporate reporters have been really focusing on and really following, was that in the middle of last year, RBI had in fact informally also asked your chairman to avoid taking executive orders or involving himself in executive orders where there were some instances of clash with the management on strategic decisions, like even in your subsidiary, and what is the way forward. Can you highlight at least some part of it, and can you confirm if RBI has ever intervened on any such matter, either officially or unofficially, sir?
No, I would have no visibility of any of that, and I'm not aware of any such intervention by the regulator on any such matters. If at all, I'm sure the RBI knows how to sort of balance between executive and the board, and yes, they will. If there are excesses that I do or the management does, I'm sure they will reach out to me. And if there are something that the board does, I'm sure they will reach out to anyone else, including the chairman. So I don't have visibility of all whatever you're saying. But whatever it is, I think, the regulator probably knows how to steer financial stability. To ensure financial stability, they will do all the things that is required, both from a supervisory perspective and also from their own nudges, softer nudges. But the specifics that you did mention, sorry, I have no visibility of the same, and I cannot confirm, and I'm not aware of the same.
So, Mr. Jagdishan, do we see you as reappointed come October? Is that process going to be put on fast track, given the uncertainty, and the bank really needs more confidence on certainty on the next CEO as well? Will you be willing to take up that challenge?
No, number one is, I have always said I'm keen. That's number one. But having said that, there is a fair amount of robust and a very transparent process which is undertaken by the Nomination and Remuneration Committee of the board.
That's right.
And which will then recommend to the board and then post that to the regulator for approvals. I don't want to cross that particular line in terms of saying that I would like to or I will be. I would like the process to take its own course, and then and if the process and the approvals come through, I'll be delighted. But as of now, I don't want to sort of second guess any of these authorities. I would like these authorities and the processes to take forward in the manner that we would like as a great governance company.
And how concerned are the FII shareholders? You have a large base of FII shareholders, and they are more critical about governance, especially of a bank.
Look, we are still engaged with him. I think we have come out very transparently. As I said, and Kiki Mistry just mentioned, if a person of that stature who shares a lot of great value system with the institution, with him on his own personal front, and where I also share similar such values, if he can sort of accept the position, which means that it's a testimony that the concerns are probably not there. And the outgoing chairman actually subsequently has mentioned the same today, I'm told, though I've been extremely busy in various calls. So I guess, you put all this perspective, you put the regulator's statement, which is another testimony of the strength of the franchise and the institution. I think all this just leads to the fact that we continue to be extremely strong franchise, well positioned for growth, especially in an economy where we seem to be extremely well positioned amidst the turmoil that's happening. The bank is also equally well positioned, just coming out of the merger. Yes. We have a surprise in form of technology over the next 2 years, how it can bring in a fair amount of efficiencies, and all put together, I think we seem to be on a roll. So
right.
I think
on a roll is what I will take as a very big takeaway. But PSL requirements, that really kicks in now as the merger process. And that is going to be a big task for the merger and the bank to really complete. What are the steps on that? Because that will give a lot of confidence and clarity about the merger process, which also Atanu Chakravarti in his letter alluded to. So PSL requirement, and how are you really taking care of that, sir?
Priority sector requirement is part and parcel of the business model of our functioning. Okay, so there are ways and means that we do. We do it organically. We also do some of the ones, especially on the small and marginal farmers. We do to the extent that is acceptable from a risk thresholds perspective. Anything beyond, we are happy to sort of invest in the RITFs or in some of the certifications that are available, etc. So the cost of this, I think, is subsumed, and so the financials that you see will between the 1.9 to 2% ROA subsumes all these things. So we are not overtly concerned. It's not just now, but even in the past. I think these are all have been factored in our plans and strategy. So I don't sort of call this as an issue at all.
Right, but macro headwinds are huge, and with this coming in, you will need double the amount of effort to recoup what is lost. One word on the stakeholders to be confident about it going forward.
No, I think, see, we have executed over 32 years a wonderful financial performance in multiple business cycles. The country over the last 15 years has been so resilient with so many external shocks that has hit. And so we are blessed to be in that kind of an economy which is strong and resilient. The institution itself is strong and resilient and at a certain scale. And so as the economy is on its way upwards, I think we should be well positioned to grab that kind of an opportunity like never before.
Right, and criteria for the next chairman position, is Keki likely to continue? Just my final question.
Whilst we would love to, but I think we would prefer this to the process that NRC has instituted in terms of the requirements for a full-time, part-time chairman, which they will sort of have a certain process which needs to fall in line with the Reserve Bank of India requirements. And if Keki's name does sort of fit into that, I think we'll all be happy. If not, I'm sure there will be an equally compelling candidate, which the nomination and remuneration.
But given the past track record, the eligibility criteria will have to be much more sharply, articulated there, Mr. Jagdish.
No, I'm sure they are well. We have some fantastic people on the board of the NRC who probably will have the gravitas to choose the right candidates, which befits the stature of the institution.
Right, but also rupee is depreciating. Okay, my final question on the economy, and this, if you can just give some clarity, with rupee depreciating, inflation going up, it could come to a discomfort for the RBI. Is banking, what all are the banking sector really bracing up for? You're a tall leader from the banking sector. What is it that you're bracing up for? And are we also looking at an interest cycle reversal if this war really continues? What are the pain points?
See, I think the Reserve Bank of India and there are a lot of other experts who have waxed eloquent on that particular subject very well. I think despite the kind of pressures that we have seen on the external front, I think the liquidity has been maintained very well. The financial system is at its benign best. So I think whatever the regulator has to do or the fiscal policy needed to be done, I think both have done extremely well in this kind of an extreme situation that we are being confronted. It's too premature to know what's going to happen over a period of time, but at least I can see in the shorter end, we don't see too much of an impact. In the medium to long term, too premature to even comment. But frankly, the economy is so resilient, and I keep saying that. I think amidst whatever is happening elsewhere, I think we are in a sweet spot as an economy. Both the fiscal and the monetary arms have demonstrated how well they have orchestrated their policies to ensure that the stability of the economy and the financial system it goes in tandem. So I'm not concerned. Frankly, these so-called movements up and down of quarterly variations is not something that we need to worry about. Look at the medium to long term. The trend is all upwards. And the expectations also upwards. There are too many people, being very negative about it. I think we should be positive. We are an optimist, and we are extremely positive to be in a positive country. So I'm an India bull, so not to worry. I'm very happy about where we are heading towards and how we as an organization can grab that.
Right. Thank you so much for your time and patience with our questions, even in the eye of storm. Thank you so much for joining us with all your insight. Thank you so much.
Thank you.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Don't look at your portfolio every day. And that's a good message to have, particularly in today's context. But you should look at it occasionally. And in fact, at this moment, probably more than at any moment over the course of the last 1.5 years, it's a good time to review and to take stock and course correct if you have to. We're going to talk about why you should do that and how you should do that. And in the second part of the conversation today, or show today, we're going to talk about the benefits that you can take with regard to the tax laws, right? You can book losses if you have to and set them off against future gains. But first, how do you go across your entire portfolio and correct might have crept in over the course of the last few years? Aditya Agarwal, who is a co-founder of Wealthy.in, is joining me today. Aditya, thanks so much for taking the time. Why is it critical right now to do a review? And we just happen to be heading towards the end of the financial year, so it's a good excuse to be talking about this.
Thanks, Alex. Pleasure to be here. No, I think reviews have always been important, but I guess I would say the last 2 years have made it super important now because, people have... we have been in a one-way market for a long time until last 12 months and so and what has happened since the start of the year, we are down 11% since the start of the year. So I guess that probably will it's sort of worked as a wake-up call for all of us that market doesn't always go in one direction, and we should review our portfolio, especially because now the importance of asset allocation comes to the fore, that if you're always 100% equity, it may sort of give us surprises at the wrong time. So yeah, I mean, it was a great reminder, and I personally believe that end of financial year is a great time because it gives you a good way to reset. I think we'll talk a little bit about how you can also optimize for your taxation and gains and losses in this time of the year. So yeah, it's probably the perfect time to be talking about why you should review your portfolio.
The way that I'm planning today's show, Aditya, is to first talk to you about how to review your portfolio. In the second half, I'm talking to a tax expert about the laws that govern the capital gains, right? And capital gains and losses. You can actually book that. So we'll leave that for that part of the conversation. Let's talk about the portfolio. Most people will wonder where to start because that ultimately is what you would face if you've not cleaned your house in a while and you're faced with a situation where there's so much work to do and you don't know where to start, but you should start somewhere. It helps when somebody puts things in perspective with a few steps that you can take. So what is the first thing that you would do?
Yeah, so the first thing that probably I'll do is probably just write down my goals again and look at, what am I really investing for? Why am I investing? Right. And once I have locked down my goals, sort of map my current investments to them and review the asset allocation of those investments. So for example, if I'm investing for my child's education, which is probably somewhere where I need the money 15 years from now, I probably should be, 80% equity, depending on my risk profile. So I think the first step to review is to see where we are in terms of our goal planning. And for each of those goals, what does our asset allocation look like? And after that, obviously, one great reminder of the last 3 months has been that, we actually can answer what is my risk tolerance correctly today. Because if I've been able to sleep peacefully during this fall of market, my probably risk tolerance is very high. At the same time, if I've been, as you said, if I've been opening my portfolio or checking it every couple of hours, then clearly I'm not really the high risk profile or high risk tolerance investor. So the first step will be that I'll review my goals. I'll review each asset allocation for each of those goals. And as I said, it's very simple exercise. It's best done with a distributor or an RIA that you might be working with. And they can help you review, set your goals against each of those investments and review that, okay, what is current allocation look like across equity, debt, and gold for each of my investments? That probably is the first step.
Okay. So it actually is one of the first questions that you should ask before investing as well, which is, why do you need the money? And the second question, most important, is when do you need it? The third question is, how much do you need? And then, of course, you can talk about whether you're on the right path, right? So therefore, once you've done that and you've come to terms with what your investments are, the second step, what would you do then? Because there are clearly, therefore, once you've done that, a few issues that creep up where maybe there are underperformers in your portfolio. How do you identify them?
Yeah. So actually the first part is the easier part. The second part is the tougher part because that's where it gets a little bit technical, right? And we as investors have been trained to just compare. So let's talk about mutual funds, for example, because I'm assuming that most of the viewers will have their wealth accumulation via mutual funds. So when we are comparing mutual funds, most of us investors have this habit of just looking at returns, 1 year, 3 year returns of a fund and choosing basis just that. So actually, that's the trap that we all fall in, because when we are choosing funds basis last 12-month returns, we are actually investing into funds that have recently overperformed but may underperform in near future, right? So the first way to probably look at, if you're comparing, if let's say if I have a portfolio and it's, let's say 25 lakh rupees, which is for my long-term needs. And if I'm looking at, let's say 5 funds, a part of that, and there are 2 flexi cap funds in that, and I'm deciding which flexi cap fund should I keep and which should I lose, I'll probably look at what have been their 3-year rolling returns and then compare their performance against benchmark. Because ultimately, a fund that I'm investing in, I'm paying them an expense ratio for them to beat benchmark for me. Right. And benchmark beating happens both ways. It can beat on the upside as well as it can sort of give me sort of less fall when the markets are falling. So the first step, for example, I think, like I was recently doing a case study there where we compared 2 flexi cap funds. And if you just look at point to point returns of those funds, it's very difficult to decide which fund is right.
Yeah.
But when you
in fact, what I'm going to do is, Aditya, I'm going to pull that on the screen while you're speaking, right? So you're talking about the White Oak Flexi Cap Fund, you're talking about the Motilal Oswal Flexi Cap Fund, and 1 year performance, this is August 24 to August 25, right? August 24 to August 25 is 3.86% negative for White Oak Capital and 6.42% for Motilal Oswal. And then Jan 25 to Jan 26 is 4% plus for White Oak Capital, 6% negative for Motilal Oswal. And what else are your learnings?
So that's what. So if you just look at two different time periods and if you just compare point-to-point returns, that is actually a useless exercise. If you go one level deeper and you look at benchmark, that what is the outperformance, you will see that one of those funds, which is White Oak FlexiCap, has outperformed benchmark by almost 57% times. Similarly, if you just look at peer comparison, there again, one of the funds has done fundamentally better. So then your decision making becomes quite easy because then you're no longer comparing point-to-point returns. You're saying that, okay, one fund, I'm looking at rolling returns over a 3-year period, and one fund has consistently beaten benchmark and one fund has consistently beaten peer versus the other. So it's a very clear choice that if I have to now consolidate my flexi cap funds, probably I'll consolidate towards, in this case, White Oak flexi cap, which is on a returns basis has done much better than my other flexi cap fund. So that is probably the step one of looking at underperformance versus benchmark, and rather than just point-to-point returns.
There is a second filter that you mentioned as well, which is the risk-adjusted metrics beyond just the returns. And in fact, in that table, you also mentioned the Sharpe ratio. This is something that analysts and experts and advisors look at as an added layer to tell you whether one scheme is better than the other. So first explain that, and also what else do you look at?
Yeah, so I will probably not explain it technically. I would probably explain it simply that when you're looking at a fund, you just not look at how much it is doing better than my benchmark. You also look at that when there are bad times, does this fund give me sleepless nights? So what does that mean? So for example, if Nifty 50 has fallen by 11% in last 2.5 months, is my flexi cap fund actually fallen same or more or lower? If I have a flexi cap fund which has fallen lower than Nifty 50, then that's great news for me because I'm not just making more money over a long-term period. I'm also falling less, which obviously means that if the fund is falling less, then it means that I'm less likely to sell or exit or panic, right? So I think that's the second filter to look at, that when markets fall, how does your fund behave? Does it fall more? Because if it's falling more, then clearly it is taking more risk. And if it is falling less, then clearly it is managing the cycles much better. So that, for example, again, here, I think we have compared two funds where one fund has fallen much lesser in a crash compared to Nifty 50 versus the other. And clearly, because if you look at these two funds also, the 5-year returns look very similar. One of them is...
We're talking about the Parag Parikh Flexi Cap Fund and the Quant Flexi Cap Fund. Yes. Both are actually stalwarts in the space or style that they operate in, right? The Quant Flexi Cap Fund, among other things, has benefited from a significant momentum play when markets have been doing incredibly well. And so the upside capture ratio, which tells you how much of the upside in the market you're capturing, is the highest among peers. Whereas Parag Parikh Flexi Cap Fund, and we've spoken about this on multiple shows, has had a defensive bent in certain situations where they've said they're uncomfortable with valuations as they stand. They've taken significant cash calls. In fact, at the end of February as well, they had 18% of cash. And that's not even accounting for the arbitrage positions, etc., all of that they have. So therefore, they've actually got a much better than a peer downside capture ratio, which is they fall less when the markets are falling. I guess it depends on which type of investor you are, Aditya.
Yeah, but I mean, any investor, because if my 5-year returns look similar and flexi cap is a category that I'll probably hold for 5-10 years, I would rather hold a fund which is giving me less of a hard burn when markets are falling, right? So I would say that, because funds are not a trading vehicle, they're a long-term wealth creation vehicle. So I would always choose personally as an investor, and even though my risk profile might be slightly aggressive, but even though I will choose a fund that is falling less during a market crash. Even I think, even one of those funds, like the fund that you mentioned, even in this particular crash, it has fallen lesser than Nifty 50 in the last 2.5 months. So I would say that is my, I would say keep it simple, keep it to those two filters, and that probably is your list to figure out that, okay, which fund to keep and which fund to lose.
The third filter is qualitative red flags. And we've seen instances, Aditya, where over the last year itself, you've had certain key manager exits. And we've spoken about that on this program as well, which is, do you bite the bullet at that moment? Because there are, let's face it, different styles now compared with 2 decades back, where the dependency, Aditya, on a single manager is not necessarily as high as it was back then, because you have research teams and you have a more collaborative approach to setting portfolios in certain fund houses. So do you wait for a little while?
It can actually work both ways. Because let's say you're an underperformer in your fund and, fund manager changes and, that fund manager is able to let go of the style which was not performing and bring in a new style. So it's obviously always better to wait, right? But there are instances which are very clear where an AMC is going through tectonic shifts or, there have been, like, for example, we obviously are getting some AMCs wanting to change hands of ownership. So there are certain such scenarios which definitely require more, I would say, scrutiny in terms of whether I should hold or not. Because I think the one big issue, Alex, overall is that, what do I do with my existing events? Do I exit completely? If I have SIPs ongoing, do I stop them? Do I redeem them? Because there's always this, tax angle which your expert will cover on, is it okay to book, pay taxes now, or should I defer taxes for the future? So unfortunately, we, while we may talk a lot about, exiting, I think what most investors often end up doing, and which I personally think is fine, is that they stop adding more money in that fund which is underperforming. Especially if SIPs, people actually should probably just pause SIPs rather than redeeming their existing portfolio, right? And wait out for a couple of quarters before they make a decision on that should they redeem and move it to a different fund.
That's a fair point, because there is also, and by the way, there is a benefit in case you have those gains, Aditya, of gains of up to 1.25 lakh that you can book in a year. So you can book some amount of that and incrementally shift. But the call to shift out incremental flows into other schemes is actually a pretty good one. So we've covered quite a bit of ground. The question that a lot of people ask, though, Aditya, is why do people not sell enough? You always talk about buying the dip, but people don't often talk about selling. Why is that?
Yeah, I think it's a very well-known psychological phenomenon. It's called sunk cost fallacy. It happens to all of us that whatever I've invested my time and energy in, I want it to work. I feel like it will work, right? And secondly, like the transaction experience itself, because, it's not like we have, it takes effort to sell and then again buy. And then sometimes after selling, if let's say there's a change in my mindset, I might not end up buying again. So selling actually takes, for you to be fully rational and, treat it as a rational decision rather than as an emotional decision. Because when we are sitting on a loss, actually, that's the worst time. When we are sitting on a loss, that is when most people end up not selling because they think that the story will turn around. And whereas you might actually be, sitting on a dud, and that might never turn around the way it will need to be able to recover the gains. So I would say that, it's at that time, it's best to work with a third party. That's why, we often recommend that work with an advisor, whether it's an RS or a distributor. So those are people, they can help you take objective calls using data. Because you as a human being, even if I talk about myself, I'm emotional about the money that I've invested.
Oh, yeah, that's a fair point. Also in the note that you sent me, Aditya, and I think this is very pertinent, what is working in 2026, and you've gone more diversified and you've gone more towards the hybrids, which I think makes complete sense in this current dynamic. So you're talking about multi-asset funds, you're also talking about value or contra, which essentially buys when it's low, and that's pretty much what we're experiencing. Balanced advantage funds, which allow you to switch, or allows a fund manager to switch between fixed income and equity and be more nimble. And you've talked about gold ETFs and funds, and you've also talked about aggressive hybrids. So I think it kind of captures the ambit. Of course, sectoral and thematic schemes have not done well in the recent past for obvious reasons because of the concentrated bets that they have, and maybe that's a good contender to weed out of your portfolio, at least or maybe to shift incremental flows. But I think it's been a really engaging and insightful conversation. Aditya, thanks so much for taking the time. Pleasure speaking with you.
A pleasure, yeah.
All right, we've discussed how you should go about cleaning up your portfolio, and that might include selling at a loss. That's not always a bad thing. In fact, it is even advised by a few people. It's called tax harvesting. And we're going to talk about it in a little bit of detail, and we'll also talk about a checklist that you need to follow before the end of the financial year. Joining me in studio is Abhishek Mehta, chartered accountant and founder of Investor Capital. Thanks so much for taking the time. Let's talk about this. And we speak about it usually at the end of the financial year, but this time more than any other year in the recent past,
best time to talk about.
It is relevant because people are, and I shouldn't be so happy while I'm saying it, but people are making capital losses, right? And so therefore, there is an advantage to be had. You can actually book things out. This is a good time, as we've already established, to clean up issues in your portfolio. What do the rules state?
So we'll divide this into 3 buckets. One is your equity and equity mutual funds. Second is your FNO, and third is your intraday, because income tax sees all these 3 things with different lenses. For equity and equity mutual funds, if there is short-term capital losses, which you can book in your portfolio, so if anything which is below 12 months, probably what you can do is you can sell those stocks in mutual funds and buy it after a day or 2. Don't buy it on the same day. Whatever capital losses you will generate, you can set it off against long-term capital gains or short-term capital gains. Both the things can be set off. The only thing you cannot do is long-term capital losses cannot be set off against short-term capital gains. That is not possible. But always having short-term capital losses is beneficial, because that is a 20% tax slab, gain which you can offset. So even if suppose I bought a share which I want to keep it for 10 years, I can always keep that share for a sell that share within 12 months and book the losses, because that will help me to set off a 20% tax rate, tax efficiency.
So a simple thumb rule to follow: short works with long and short.
Yes.
Long does not work with short.
Yes.
Long only works with long.
Long.
Okay. I hope that was not complicated. Basically, if you make short-term losses, you can set that off against long-term capital gains and short-term capital gains. But if you're making long-term losses, that is, if you've held a security for more than 1 year and you're making losses, and you sell and you book those losses, you can only set that off against long-term capital gains.
Right. And even if you don't have the gains, you can carry forward this loss for next 8 years.
8 years, it's a long time.
Yes.
And you can set off a portion of that, you can utilize bit and bit and bit.
Yes, every year you can use it for the next 8 years. So
I hope people don't have that much loss.
Yes, but even if you have a loss and you don't have a gain, so it's the best time, at least book your losses, buy it the next day or probably T+2, and use those losses for the next 8 years to set off your 20% tax rate, gains in the future.
Why do you say don't buy it on the same day?
Because a lot of time then income tax sees it as an intraday transaction, and intraday is considered with a different, it is considered as speculative business income and the speculative business loss. So never buy it on the same day. Probably buy it the next day, or even better to buy it T+2 days, so that it doesn't come under the intraday transaction.
And then we also have to talk about settlement, right? So you need to make these sales well before the end date, right?
End date, before 31st March. You have to now plan it. Even if you sell it on 31st March, you will book your losses, and probably you can buy it on that day. And you can buy it on 1st, 2nd or 3rd April, whatever is comfortable with you. So that is one part. Second is FNO. Okay, now how FNO is looked with income taxes, it is seen as a business income. So if you have losses on your FNO, be very happy also for 1%, because now you can set off these losses against your business income. Or probably your interest income from other sources. It cannot be set off against capital gains. It cannot be set off against salaried income. But if you have FNO losses, you can very well set it off against your business income, which is taxed at 30, probably your slab rate, and if you're in the highest, then 32.1, and also from your income from other sources.
Which is interest income, fixed deposits,
fixed debentures, bonds, interest income, whatever you're getting. This loss also you can carry forward for the next 8 years. Okay. So
and the third bucket?
And the third bucket is your intraday. Now this is seen as a speculative business income. This cannot be set off against any other thing. You can only carry forward this loss for the next 4 years. So government doesn't look intraday as a good thing. So they don't want to take it carry forward for 8 years. You have to set it off in the 4 years. Secondly, you cannot set it off against any other income of yours, like STCL can be set off against your capital gains, or FNO can be set off.
This is only for intraday gains.
Intraday gains. So income tax sees all three as different. Your intraday is seen as a speculative business income, F&O is seen as a non-speculative business income, and your equity and equity mutual funds is seen as a normal trading is seen as your capital gains tax.
Okay, so this kind of covers what you should do. It's actually a great idea for you to clean house before the end of the financial year. It's a great opportunity, and beyond what everybody is talking about with regard to asset allocation and all of that and buying the dip, this also, as we've spoken about, provides you with a good opportunity to correct mistakes that you might have made, especially if you can set off against gains for the next 8 years. Coming to the checklist that you need to follow, there are several things that you need to pay attention to which can slip under the radar.
Yes.
Take us through the list.
So one more point I just want to add in that tax loss harvesting. If you have got bonus shares in any of your companies, what you can do is, and 9 months have happened, 9 months have gone by, you can sell those shares or the original shares what you used to hold. So that will also help you to generate some capital, short-term capital losses. So the only caveat is, once the bonus shares is issued, you have to wait for 9 months. You cannot sell within that 9 months. So sell it between 9 and 12th month and generate that short-term capital losses and only sell the original shares. Because any bonus shares issued, if one by one is issued, probably the 500 share would have become 250 rupees. So you will get that 250 rupees short-term capital loss which you can generate easily through the bonus issues also.
Yeah, especially if you're looking to hold for the long term.
Longer
in which
term.
case, the half of the shares which you originally had, you had those gains, and you will eventually book them. Okay, fair enough. All right. So that's and we don't know. At some point, the government may look at this and say, hey, you know what, this is...
Right. So they have already looked. That's why they are saying you have to hold at least for 9 months. Okay. So that is why you have to sell it in the window of 9 to 12. Because after 12 months, it will become a long-term capital gain or loss. So this is the best window. If you have got a bonus share, 9 months have happened, and you are in that bracket of 9 to 12 months, sell it, probably buy it next day or day after, and book those losses.
We're winding down to the end of the show. Let's run through the list of
checklist. Yes. So before the year end, couple of things you need to do is, one, if you are staying on a rented apartment, please pay your TDS. If you are paying a rent of more than 50,000 rupees, you have to deduct 2% TDS and pay it by 30th of April. Second thing, if you have forgotten to pay your advance tax, 15th March was the last day to pay the advance tax. You have to pay 100% of the tax by 15th of March.
If you miss the deadline?
And if you miss the deadline, there's a 18% interest what you have to pay per annum.
Even today?
Even today. So if you have forgotten for 3 days now, you'll have to pay 1.5% interest on that.
Okay.
So a lot of time people get confused that why the return filing is on 31st July. That is return filing date. You have to pay your advance tax.
And you have to pay
15th
advance
March.
tax anytime you have sold something and booked the capital gains.
Everything has to be paid and calculated. Third, how do you plan your advance tax? Look at your 26AS and AIS so that you will come to know what all other incomes you had in case you have forgotten anything, like your interest income, your dividend income, your bonds, debentures, capital gains. All those things mostly today are captured in your AIS. So do look at your AIS. Fourth, check your workstation in the income tax website if there is any pending compliance which has to be done by your end. So do check that. Last, for NRI people, if you have come back to India this year, just check your tax residency status, because if you have stayed in India for more than 182 days, then now you are a resident person and your global income will be taxable. A lot of time people forget to check that and pay the advance tax. So especially people who have come from outside India and staying in India looking at the global scenario, a lot of people have come back. Check your NRI tax status before the year ends.
Quick follow-up. In the case of the rent payment, suppose there are 2 PANs and in one rent agreement paying to one PAN, and it's not 50,000 for each PAN. Do you still have to pay the 2%?
So it is per landlord. So if I'm paying my rent to 2 people, suppose I'm paying my rent to you and your wife, and 25,000 is there, then I don't need to pay the TDS. But if I'm paying more than 50,000 rupees per landlord, then I have to deduct 2%.
Even if it's multiple people pay?
That is okay. If in the single agreement, 3 people name is there, 4 people name is there, and you are paying 25,000, then you don't need to deduct.
You don't need to pay. That's what I had.
But if you are staying on a rented apartment of an NRI, you have to pay 31.2% as TDS. Now the difference is, in case of individual, if I'm paying rent to you, then I have to only pay once a year, that is at the end of the year. But in case of an NRI, I have to pay it every month, and that too at a higher rate, which is 31.2%.
Interesting. All right, so we covered quite a bit of ground. Thanks so much as always for taking the time. NDTV Profit.
Trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. The scanner, we dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations. Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
All right, team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid
Cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive.
Hello and welcome to NDTV Profit. My name is Varsha. Well, if I were to talk about the power sector and especially renewable energy, a lot of companies, people are betting when it comes to renewable energy, and a lot of companies are seeing huge growth when it comes to renewable segment. Companies are betting when it comes to green hydrogen, green ammonia, and wind sector is also seeing a lot of tailwinds as well. But to speak more about what lies ahead when it comes to the overall renewable sector, the outlook on the renewable sector, the opportunity when it comes to solar, wind, green ammonia, green hydrogen, I am here joined by Dr. Farooq G. Patel, who is founder and chairman of KP Group. Hello, Mr. Patel. Welcome at NDTV Profit. Always pleasure to have you. Let me start. Hydro power development for the period from 26-27 to FY30 and 31. Is KP Group planning to participate in this 1 to 25 megawatt small hydro power segment under the new scheme?
Namaste. See, just yesterday, Cabinet has announced the hydropower scheme for the renewable energy, and as we all knows that today the main concern for the India is to be energy and sustainable energy. For that purpose, Cabinet has trying to motivate in the renewable sector for the hydropower also. We yet not in the hydropower, but let
what is the KP Group's target when it comes to small hydropower capacity for the next 5 years? I don't want the exact number, but if you could give us the ballpark range.
today we are in the evaluation position. Target put the target for 2030, which align with the national goal of 500 gigawatt renewable energy. We have put the 10 gigawatt target. Out of 10 gigawatt target, KP has already doing a 7.7 gigawatt, 1.2 gigawatt is in pipeline, and the 1 gigawatt more which are going to be closed by the June. That is our internal target. For your answer is there is no target yet for the hydropower.
All right, let's shift our focus to wind. With the government re-evaluating wind tenders of 1 gigawatt, how do you see the order pipeline for wind projects evolving?
See, wind project is always be a and to the power should come from that wind. So government has already announced few tenders a few say weeks ago, and already KP has got the 500 plus megawatt wind tender, one from the SECI and SGVN and from the GUNL also, where we are doing the at least next year one or more than that in IPP and the EPC contract also for the wind. That is what we are thinking, and government have to do this wind things for the renewable clean energy in future.
Mr. Patel also wanted to understand KP Group strategy when it comes to green hydrogen and green ammonia.
That's a very good question. KP Group has already started this green hydrogen initiative from the last 2 years, and we are already started 1 megawatt green hydrogen plant to our Matar factory for hydrogen as a fuel we are using in the galvanizing tank. And of course we have won one more hydrogen NTPC tender also for the 150 crore rupees as a KP, and we have already done the MOU with the ammonia of 1 lakh metric ton per annum from Korea. And this all and the one more thing that KP has done in a KP green hydrogen and ammonia private limited company, that we are going for the fueling station for the green hydrogen, and that's we are planning in the next 3 to 4 years with all the express highways fueling station. We are going to be covered with the today's we are with the Tata's JV, and in the future also we are trying to go with the big players in this green hydrogen and the ammonia stuffs.
Sticking to that, what kind of capex and partnerships are required in this space, and where are you in this capex cycle?
Capex size is always big in a green hydrogen and green ammonia. It's a huge capex going to be infused in future. So today the already technology is also in a not on a mature level like electrolyzer and all stuff. When today 1 megawatt is around 24 to 25 CR, but tomorrow it will goes down. That's a hope also. And with the renewable energy, of course, it's when we get the power like 3 rupees or 3 rupees and 50 paisa in the green hydrogen, it will be viable in a very near future. You can say the LPG and the CNG and the green hydrogen will be in a one line, and then it will be the profitable for everyone.
Mr. Patel, you're also entering when it comes to BESS, battery energy storage system. What's the outlook there? What's the update on these projects?
KP Group have already 1 gigawatt plus base tender already we have won. Today is in our kitty, and the future is of course the base because of the grid stability and the FDRE power, RTC power.
President Trump to fail. But you, the American people, know better. Yes, there are reporters in front of me, but they are not our audience today. It's you, the good, decent, patriotic American people. You, the hardworking, tax-paying, God-fearing American patriots. The media here, not all of it, that we're somehow spinning toward an endless abyss or a forever war or a quagmire. Nothing could be further from the truth. Hear it from me, one of hundreds of thousands who fought in Iraq and Afghanistan, who watched previous foolish politicians like Bush, Obama, and Biden squander American credibility. This is not those wars. President, it's decisive. Our objectives, given directly from our America First president, remain exactly what they were on day one. These are not the our objectives, unchanged, on target, and on plan. Destroy missiles, launchers, and Iran's defense industrial base. Nuclear weapon. Our objectives from day one. To the patriotic members of the press, nobody can deliver perfection in wartime. This building knows that more than anyone. But report the reality. We're winning decisively and on our terms. Iran is a vast country, and just like Hamas and their tunnels, they've poured any aid, any economic development, humanitarian aid into tunnels and rockets. That's what they did with Hamas. Iran has funneled decades of state resources, not to their people, but into missiles and drones and proxies and buried facilities. But we are hunting them down methodically, ruthlessly, and overwhelmingly, like no other military in the world. 1,000 targets across Iran and its military infrastructure. That is not incremental. That is overwhelming force applied with precision. And again, today will be the largest strike package yet. Continue to degrade. We're hunting and striking death and destruction from above. Iran's air defenses flattened. Iran's defense industrial destroyed. We've hit hundreds of their defense industrial bases directly. Their ability to manufacture new ballistic missiles has probably taken the hardest hit of all. Ballistic missile attacks against our forces, down 90% since the start of the conflict. Same with one-way attack UAVs. Think kamikaze drones, down 90%. Now, the Iranians will still shoot, we know that. But they would shoot a lot more if they could. But they can't. The last job anyone in the world wants right now? Senior leader for the IRGC, or Besiege. Temp jobs, all of them. And to borrow a page from Admiral Ernest King in World War II, we've decided to share the ocean with Iran. Ships with battle damage assessments pending for many more. See, oftentimes we have to wait a few days on battle damage assessment to get the real number. Their surface fleet is no longer a factor. Their submarines, they once had 11, are gone. Their military ports are crippled. Iran has terrorized the United States and our interests for 47 years. Their core industries, not steel or agriculture or tourism, their core industries are state-sponsored terrorism, proxy militias, underground networks, ballistic missiles, and a violent, messianic, Islamist ideology chasing some sort of apocalyptic ambitions is not just a regional problem. It's a direct threat to America, to freedom, and to civilization. The world, the Middle East, our ungrateful allies in Europe, even segments of our own press should be saying one thing to President Trump. Thank you. Thank you for the courage to stop the nuclear bomb. Thank you for doing the work of the free world. Yesterday's ceremony reminded us why we fight. Not for nation building or democracy promotion, but to crush direct threats to America, Americans, and our interests. We fight to win, and we are. My 13-year-old son popped into my office last night while I was editing these remarks. He asked about the war and the families I met at Dover. And I looked at him and I said, doesn't have to deal with a nuclear Iran. It's the truth. And they did. So to the families who said, finish this, we will. May Almighty God continue to bless our troops in this fight. And again, to the American people, please pray for them. Every day, on bended knee. Christ. To the troops, keep going. And Godspeed. Over to you, Mr. Chairman.
Thank you, Mr. Secretary. Ladies and gentlemen, good morning, and thank you all for being here. I also had the honor yesterday, as the Secretary said, of traveling up to Dover with the President to welcome home our six fallen. It was an honor and a privilege for me to be there and to say thank you to their families. And I want to mention their names this morning. From the 6th Aerial Refueling Wing out of MacDill Air Force Base, Florida, but stationed as part of an active associate unit at Birmingham, Alabama, Major Alex Klenner, John Alex Klenner, Major Ariana Savino, she was posthumously promoted from captain to major, and Technical Sergeant Ashley Pruitt, the boom operator on that crew. From the 121st Aerial Fueling Ring, Ohio Air National Guard out of Rickenbacker Air National Guard Base in Columbus, Ohio, Captain Seth Koval, Captain Curtis Ankt, and now Master Sergeant Tyler Simmons, who was also promoted in the boom operator on that crew. To a person and every family member I spoke with yesterday, they all shared that their family members loved serving, they loved being part of a great team and a crew, and they loved airplanes and aviation. Our nation's tanker crews really are unsung heroes, incredible warriors who put their lives on the line so we can continue to take the fight to an enemy. I've personally witnessed their courage and tenacity many times, from the morning of September 11th, where they answered my call for some help, to the skies over foreign countries where they've come forward out of their safe tanker track to give me gas when I simply could not leave a ground force that was engaged in a firefight. They've answered the call and come forward time and time and time again. I'm filled with incredible pride and gratitude for all that the tanker crews do, our pilots, our boom operators, and the maintainers. And to the families of our six fallen, know that we share your grief. Our nation will never forget their sacrifice, and we will never forget their names. Our entire joint force mourns with you today. and will continue to remember their incredible gift of a great example for all of us. Now let me turn to an operations update. U.S. CENTCOM remains on plan to achieve our military objectives and remain unrelenting in our pursuit of Iranian missile capabilities, UAV capabilities, and their Navy, and as the Secretary said, their industrial base. Each day we continue to attack deeper into Iranian territory. As reported by U.S. Central Command yesterday, the U.S. military dropped 5,000-pound penetrator weapons into underground. These weapons are bespokely designed to get through concrete and/or rocks and function after penetrating those barriers. We continue to hunt and kill mine storage facilities and naval ammunition depots. We continue to hunt and kill afloat assets, including more than 120 vessels and 44 mine layers, and the pressure will continue. We're flying further to the east now and penetrating deeper into Iranian airspace to hunt and kill one-way attack garrisons, destroying Iran's ability to project power outside of its borders. The A-10 Warthog is now in the fight across the southern flank and is hunting and killing fast attack watercraft in the Straits of Hormuz. In addition, AH-64 Apaches have joined the fight on the southern flank, and they continue to work on the southern side, and that includes some of our allies who are using Apaches to handle one-way attack drones. In Iraq, AH-64s have been striking against Iranian-aligned militia groups to make sure that we suppress any threat in Iraq against U.S. forces or U.S. interests. And we remain focused on pursuit of any platform that Iran could field to harm Americans or our partners. Last Friday, Admiral Cooper and the CENTCOM team conducted precision strikes against more than 90 targets on Karg Island, which included all of their military-only infrastructure, which included air defenses, naval base, mine storage, and deployment facilities. And as the Secretary mentioned, we continue to strike against Iran's defense industrial base and will continue to do so. Today, I want to continue my theme of talking about members of our incredible joint force. Today, I want to talk about some exceptional airmen who are engaged in the fight daily. United States Air Force, Air Force Reserve, and Air National Guard crews within our bomber force. The B-1s, B-2s, and B-52s, and the airmen on the ground who maintain and load these weapon systems. They are the backbone of America's long-range strike capability, and their contributions to Epic Fury have been decisive. Assigned to STRATCOM under Admiral Rich Correll and supported by TRANSCOM, the tanker force that we've talked about, under the command of General Randall Reed, every mission is designed to achieve overwhelming outcomes on behalf of the United States and our allies. Last weekend, I had the chance to go out and see some of our deployed bomber forces, the B-1 and B-52 crews, and I had a chance to sit down with some young aviators.
Trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next.
Sushil Singh, former ambassador, joins us on this segment on the show this morning. Sushil Singhal. Ambassador Singhal, thank you so much for your time to us this morning on NDTV Profit. And
thank you.
Joining
thank you,
us
Tamanna, for having me.
Absolutely. Joining us in and giving us perspective, because a lot of people watching this program are investors who are now heavily engaged in what's happening geopolitically, but we need to give them context. Is it safe to say that the events of the last 12 to 14 hours have worsened the situation extensively? This is the worst case scenario playing out when this entire war started, isn't it?
Certainly, Tamanna, the attacks which have taken place on the gas field, I think it is a game changer. Though President Trump has, given he has spoken in two ways. One is, of course, he said Israel will not do it again. But at the same time, they have threatened Iran that if they continue to attack Qatar, because they have also attacked some facilities in Qatar, then the attacks on the Iranian oil fields will commence or will continue. But the point is that this attack, this is, as we all know, Iran and Qatar both share the same gas field, gas reserve rather. And if it is damaged, so it will damage the Qatar also. And we know that Qatar supplies is the largest, supplier of gas to the world. So if that is affected, it is going to have a catastrophic impact on the global economy, particularly on the oil and gas industry. So I hope and pray that they will stop doing this, what is happening, because if this happens, we are moving in a very, very, bad phase, and there'll be a lot of shortages. Already the oil has crossed $113 in the morning. So it will go further down, further up, and the economy of not only one country, everybody will suffer. In our neighborhood, we are already seeing that what is the status, what is the situation there. India is helping them. Of course, our spokesperson has just said that India is considering the request, and my feeling is that we will be helping them with the shortages. But India also has a finite sources. We all know that. So India will also be affected if it goes on long run. And but again, as I said earlier, that hopefully the better sense will prevail.
Sure.
And they will stop attacking these gas field and oil fields.
Sure. At least the statement that was made, Ambassador Singhal, by Donald Trump seems to suggest that that indeed will take place. He's called for a cessation of strikes on oil infrastructure. But one asks why this took place in the first place. And of course, not reading too much at this point into Donald Trump's posts on Truth Social, but the tone of what he is suggesting seems to say that Israel has done its own thing. And this is not something that the US was aware of. So it is very clear that Israel is pushing its own agenda in this matter and the war front that they've taken up. So the question is, even if the US does want to exit, does it become harder for them because of their partner in that region, which is Israel, which is pushing its own agenda?
Well, the point you're making is very valid. And let me take you back to June 25, when Israel on its own attacked Iran, and President Trump came out as a savior. And he, of course, did one sortie and said every objective is achieved. And then he said, I'm mediating the peace between the two sides. So he became a mediator also. Of course, at the time, Iran did a symbolic attack on American base in Qatar. And USA was informed, it was all stage managed. This is what normally Donald Trump does. But this time, I think the Israelis learned their lesson that Donald Trump, being what he is, will look for a very quick victory. And somehow, I don't know how, Israel was able to convince him that this is going to be a quick, operation to the like of Donald Trump. And this, once they take out the leadership first year of the leadership, it will have internal contradictions and it will collapse.
Yeah, you could argue a lot of people feel like that. Thank you so much, Ambassador Singhal, for giving us your thoughts. Really appreciate your time this morning.
Thank you.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network. He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the Your Company, weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Was ready, now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot.
Hello and welcome to this special we are tracking today. Now remember, HDFC Bank and its changes in the position of chairman of the board led to the stock to really plummet by 5% today. Key news is that now appointed HDFC's old-timer KK Mistry as the interim chairman of this particular board. And also remember that KK Mistry has been appointed only in the interim was not without a drama. The stock really fell because of the concerns coming in, because of the strongly worded statement and the letter of resignation that has been written in his resignation letter says, and I quote, certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal values and ethics. Mentioned there sent out alarm bells amongst the stock market and the investors of HDFC Bank, and therefore the stock really plummeted in trade, and that was really the concern of probably corporate governance and transparency issues, or even a conflict within the board and the management really came to the fore in the market and reflected on the stock movement of HDFC Bank. Now, he also went on to say that I joined the board of HDFC Bank in May 2020. HDFC that really created a conglomerate under the bank. Now, this strategic initiative made HDFC Bank the second largest bank in the country, though the benefits of merger are yet to be fully fructified. So this particular line as well, that the benefits of mergers are yet to be fully fructified, that also came in as a concern in the ALE concerns. They did in a statement say that there are no material concerns on record for HDFC Bank, and that HDFC Bank remains well capitalized, and that the transition arrangement RBI stated. They also stated that they will continue to engage with HDFC Bank board. This is something that the board of the bank has also stated in their con calls to the concern over conduct and governance. So transparency issues, corporate governance issues were at the fore, and that's what really reflected on the stock price, and that's the concern that the management as well as the board of HDFC Bank tried to allay in the day-to-day through various discussions with various participants. And they also stated that they are in discussion with several of the investors to put forth their point. And this is what we gather from sources with direct knowledge in and around the bank, that Atanu's exit really strengthens Shashidhar's position as the CEO, because there was some bit of friction. And that Shashidhar's reappointment application is yet to be filed with the RBI. But remember, his renewal is due in October 2026, which will be very, very Shashidhar Jagdishan. And I posed the first question that in the eye of this particular storm and the turn of events, as the CEO of the bank, what are the measures being taken and how is he going to recoup the confidence and the steps being taken by the management? Hear it out.
Number one, the fundamentals, the strength of the franchise, it is something that I mean it not just from a vantage point of executive management perspective, but also from the board perspective as well.
Right.
Former part-time chairman has decided to move on. I think that was a little bit of a surprise for not just me, but for a very constructive relationship over the last 5 years. He brought in a fair amount of intensity in terms of we have taken away rather positively, and therefore we insisted his continuation. But I guess he seemed to have made up his mind in the insertion of those two lines has did create furor in our minds as well, and so every board requested him to reconsider, especially since he did mention that there's nothing of any concern that he could share.
Right.
Now, obviously, this is a very strange situation to be in.
Yes.
It has created an impact in the market, rightfully so, because the people are far and wide across the globe, and anyone remote looking at it at dispassionately without knowing the color behind the news will sort of will have what they see in black and white. But I think the kind of engagements that we have done since morning, collectively as a board, that we are an institution with a strong governance, with complete value systems at the top, and that is something that else now is something that the performance will speak for itself, especially as we are on the cusp of this is a great opportunity for all of for anyone to be invested in this particular stock.
Right, you've given enough of these, pacifying and also confidence-building, statements, Mr. Sridhar. And now I want to ask you one important question that is about the concerns, because most of the brokerages have really stated that if only the concerns could have been really revealed, made many statements that there were no concerns, but there is one thing that we as corporate reporters have been really focusing on and really following, was that in the middle of last year, RBI had in fact informally also asked your chairman to avoid taking executive orders or involving himself in executive orders where there were some instances of clash with the management on strategic decisions, like even in your subsidiary, and what is the way forward. Can you highlight at least some part of it, and can you confirm if RBI has ever intervened on any such matter, either officially or unofficially, sir?
No, I would have no visibility of any of that, and I'm not aware of any such intervention by the regulator on any such matters. If at all, I'm sure the RBI knows how to sort of balance between executive and the board, and yes, they will. If there are excesses that I do or the management does, I'm sure they will reach out to me. And if there are something that the board does, I'm sure they will reach out to anyone else, including the chairman. So I don't have visibility of all whatever you're saying. But whatever it is, I think, the regulator probably knows how to steer financial stability. To ensure financial stability, they will do all the things that is required, both from a supervisory perspective and also from their own nudges, softer nudges. But the specifics that you did mention, sorry, I have no visibility of the same, and I cannot confirm, and I'm not aware of the same.
So, Mr. Jagdishan, do we see you as reappointed come October? Is that process going to be put on fast track, given the uncertainty, and the bank really needs more confidence on certainty on the next CEO as well? Will you be willing to take up that challenge?
Number one is, I have always said I'm keen. That's number one. But having said that, there is a fair amount of robust and a very transparent process which is undertaken by the Nomination and Remuneration Committee of the board.
That's right.
And which will then recommend to the board and then post that to the regulator for approvals. I don't want to cross that particular line in terms of saying that I would like to or I will be. I would like the process to take its own course, and then and if the process and the approvals come through, I'll be delighted. But as of now, I don't want to sort of second guess any of these authorities. I would like these authorities and the processes to take forward in the manner that we would like as a great governance company.
And how concerned are the FII shareholders? You have a large base of FII shareholders, and they are more critical about governance, especially of a bank.
Look, we are still engaged with him. I think we have come out very transparently. As I said, and Kiki Mistry just mentioned, if a person of that stature who shares a lot of great value system with the institution, with him on his own personal front, and where I also share similar such values, if he can sort of accept the position, which means that it's a testimony that the concerns are probably not there. And the outgoing chairman actually subsequently has mentioned the same today, I'm told, though I've been extremely busy in various calls. So I guess, you put all this perspective, you put the regulators' statement, which is another testimony of the strength of the franchise and the institution. I think all this just leads to the fact that we continue to be extremely strong franchise, well positioned for growth, especially in an economy where we seem to be extremely well positioned amidst the turmoil that's happening. The bank is also equally well positioned, just coming out of the merger. Yes. We have a surprise in form of technology over the next 2 years, how it can bring in a fair amount of efficiencies, and all put together, I think we seem to be on a roll. So
right.
I think
on a roll is what I will take as a very big takeaway. But PSL requirements, that really kicks in now as the merger process. And that is going to be a big task for the merger and the bank to really complete. What are the steps on that? Because that will give a lot of confidence and clarity about the merger process, which also Atanu Chakravarti in his letter alluded to. So PSL requirement, and how are you really taking care of that, sir?
Priority sector requirement is part and parcel of the business model of our functioning. Okay, so there are ways and means that we do. We do it organically. We also do some of the ones, especially on the small and marginal farmers. We do to the extent that is acceptable in the RITS or in some of the certifications that are available, etc. So the cost of this, I think, is subsumed, and so the financials that you see will between the 1.9 to 2% ROA subsumes all. I think these are all have been factored in our plans and strategy. So I don't sort of call this as an issue at all.
Right, but macro headwinds are huge. Lost. One word on the stakeholders to be confident about it going forward.
No, I think, see, we have executed in multiple business cycles. The country over the last 15 years has been so resilient with so many external shocks that has and resilient. The institution itself is strong and resilient and at a certain scale. And so as the economy is on its way upwards, I think we should be well positioned to grab that kind of an opportunity like never before.
Right, and criteria for the next chairman position, is KK likely to continue? Just my final
that whilst we would love to, but I think we would prefer this terms of the requirements for a full-time, part-time chairman, which they will sort of have they have a certain process which will if Keki's name does sort of fit into that, I think we'll all be happy. If not, I'm sure there will be an equally compelling candidate, which
will have to be much more sharply, articulated there, Mr. Jagdish.
No, I'm sure they are well, we have some fantastic people on the board of the candidates, which befits the stature of the institution.
Right, but also rupee is depreciating. Okay, my final question on the economy, and this you can just to a discomfort for the RBI. Is banking, what all are the banking sector really bracing up for? You're a tall leader from the banking sector. What is it that you're bracing up for? And are we
see, I think the Reserve Bank of India and there are a lot of other experts who have despite the kind of pressures that we have seen on the external front, I think the liquidity has been maintained very well. The financial system is at its benign best. Or the fiscal policy needed to be done. I think both have done extremely well in this kind of an extreme situation that we are being confronted. It's too premature to know what's going to happen. Much of an impact in the medium to long term, too premature to even comment. But frankly, the economy is so resilient, and I keep saying that. I think amidst whatever is happening elsewhere, the fiscal and the monetary arms have demonstrated how well they have orchestrated their policies to ensure that the stability of the economy it goes in tandem. So I'm not concerned. Frankly, these so-called movements up and down of quarterly variations is not something that we need. And the expectations also upwards. There are too many people, being very negative about it. I think we should be positive. We are an optimist. So I'm an India bull, so I'm very happy about where we are heading towards and how we as an organization can grab that.
Right. Joining us with all your insight. Thank you so much.
Thank you.
So you heard the entire conversation with Shashidhar Jagdishan, who's the CEO of HDFC Bank, on the various aspects that he's working, which has been lost because of this particular turn of events and incident. In fact, he did say that the fundamentals of the bank remain intact. But the biggest takeaway for me, while watching HDFC Bank developments very, very closely, has been the certainty on the management and how it's going to go forward in terms of the leadership also. Remember that Shashidhar's tenure comes to an end in October 2026, and his reappointment is something which could be on the anvil, which has been stated now by the chairman of HDFC Bank in the con call. KK Misri did state that will be taken up by the NRC of the board very, very reappointment question asked, I am keen on it. So this is the biggest takeaway really coming in. Of course, he has caveated that it has to go through the due processes and the RBI really provide in terms of the certainty of leadership, and also who's going to be the chairman of the board after 3 months of interim period for KK Mistry will be watched out very, very closely. All right, so that was about this particular interview. But remember that the brokerages are KK Mistry also spoke in the con call to allay the concerns coming in from the various stakeholders. Let's hear him out before we take it to the brokerages.
In no board meeting has there been any kind of, complete differences of opinion or anything of that sort. And the board minutes will reflect that. Relationship, I'm human being. Happened. There was no power struggle in the bank, as you put it, Suresh. The bank works, the entire bank, the management team in the bank works as a cohesive unit, and to my mind will continue to work. Aligns with my principles and the level of integrity that I would expect from the bank. None of us as board members are aware of what are the specific issues which he didn't give any specific explanation.
All right, so that was a full picture on the key developments at HDFC Bank, the largest corporate development that we have seen, and calls for a closer look at the governance aspect and how the bank really allays the concerns of its stakeholders. With that, it's a wrap from me, Nisha Poddar. Thank you so much for tuning in.
To understand the Tamil Nadu twist, join me in the midst of
He has been tracking markets for over a decade, spots the trends before they hit the screen. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. Trust. Leading India's conversations. Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid
cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means
for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
For over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru?
Of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome to NDTV Profit. You're watching this special coverage. And not only that, we're talking about benefits that would be trickling in for consumers as well. I am Hiral Dadia, and with me is Varsha, who covers this space pretty closely. Varsha, this opens up the Pandora's box for a lot of your generic players. And it's not only the ones who are going to make generic version of semaglutide, but the entire diabetes portfolio. Hospitals, diagnostic companies, that opportunity is just immense.
I would say a big picture or a big change in entire healthcare. Considering one of the hottest drug, that is semaglutide, which is the active ingredient in Ozempic, is going off patent in India on 20th of March 2026. Now, for diabetes and plus weight loss, that is obesity. And going off this patent will actually open the market for 50 plus Indian pharma companies. Fastest growing drug segments globally. Now, talking about, let's talk about some history and, what are the other parameters to it. So, semaglutide, if you see, then you have Wegovy, and also the third brand is Rybelsus. Now, if you see the patent expiry in India for have the other GLP also. Like I talked about semaglutide, you have liraglutide. The innovator is of course Novo Nordisk. There are generics already. Biocon is venturing, and other pharma companies are also venturing into it. You have dulaglutide, again innovator. The maker of this active ingredient is Eli Lilly. Again, generics are not yet because it depends on the patent expiry. Then you have far away because the patent expires late 2030, 2035. Now, what is the India impact? No sudden price drop. Innovators continue to dominate. Gradual opportunity for Indian players.
So Varsha, are we saying that apart from semaglutide, for these other products, are far away?
Correct.
So the situation for these three products is very different as compared to a semaglutide.
Because in semaglutide, you'll see 60-70% of price drop, because now whole lot of generics company will come in and they'll sell because it's a volume game.
Correct.
After the patent expires, it's all a volume game. Now moving on, you know what happens after patent expires? Price drops sharply, like 50 to 60%. In India, also if you see, demand explodes due to affordability, because you're getting that drug, oral drug at a very cheap prices, and demand explodes due to everybody will have that capability to afford the Ozempic, I would say. Now, who will benefit in India? Which all are the companies which will benefit in India? Every other pharma. Biocon, Lupin, Mankind, Natco, Emcure, Zydus. These are all the formulation player which will be benefited. Even CDMOs companies will be benefited, who will make the API. All the CDMO companies will be benefited. API manufacturers and distribution and retail pharma networks will also be benefited. Hospitals will be benefited from this. A whole host of healthcare.
I mean, it's the loss of exclusivity,
Loss of exclusivity. Now you won't be able to mint that money unless you come up with the other, a drug, I would say. So Novo Nordisk is of course the loser, considering the pricing erosion that the company will see. And of course, Novo Nordisk will also come to India, but at a very low price.
Yeah, so that's going to be the key question. But let's understand from all our guests. We have Ramesh Swaminathan, Executive Director, Global CFO from Lupin. We have Neeraj Sharma, who's the CEO and Managing Director of OneSource Specialty. VM Ramana, CEO Branded Markets, India and Emerging Markets at Dr. Reddy's, who are joining in as well. And we will have Sawan Mukherjee, who should be joining us on the show soon. But let me get in Mr. M.V. Ramana's view. Mr. Ramana, let me come to you. We're talking about a market which is going to explode in terms of where India goes. What is the kind of opportunity do you think that the Indian generic players are sitting on? And two, how are you looking at the opportunity for a Dr. Reddy's?
So good afternoon to you and all the panelists. Yes, so this is a very important opportunity, not only for Dr. Reddy's, but for many of the generic pharma companies, because the patents now start to expire not only in India, but several emerging markets, including Canada. So if you see the world over, there are well served. Second, I think where it was partially served, and there are countries in which the GLP products have not been launched. For Dr. Reddy's, because of a presence both in India and emerging markets, we expect to take these products at an affordable price and ensure that these products are available across all of the markets where the patents would expire.
So, Mr. Ramana, let me take the opportunity to take a second question with you on this as well. In the entire development journey, where is Dr. Reddy sitting at right now? And two, with the kind of opportunities that come your way as well, from a benefit to a consumer perspective, any inputs that you have?
Sure. So first, I think Dr. Reddy's has been in the forefront of developing the generic version of semaglutide, and we all obviously have portfolio of products within both the diabetes the manufacturing capabilities, because this is a very complex product. It is a complex injectable in the form of a peptide. So we have been able to put together a manufacturing facility doing the API. We're working on the formulations, both with our partners as well as our own capacities. And then we have the front end in most of the countries where we would be able to take the product. Second, I think you just spoke about the product itself. Semaglutide is a product that would help not only the people with diabetes, but also people with obesity. India actually ranks very high in the number of obese that start to get available starting from tomorrow. You would see a good amount of offtake because these would be at affordable prices. Not only Dr. Reddy's, the rest of the Indian companies would also ensure that these products are affordable. And as a company, we would obviously look at not only ensuring availability of the product, how might we be able to connect with the evidence on how this product helps both the diabetics and obese patients by partnering with the HCPs in India.
Well, Mr. Swaminathan, coming to you on this, starting with the semaglutide patent expiry on March 28th, how big is an opportunity for Indian companies and of course for Lupin as well?
The semaglutide becoming generic is certainly a very large opportunity that all of us are excited about. Clearly, because of the fact that India has a very large population of diabetic patients. There are more than 100 million people who have been impacted by diabetes, and there are obese as well. So clearly, it's a very, very large market. If you look at, in fact, the numbers, the growth rate, it is 15.7% in the last 3 months in terms of diabetic products being consumed. Whilst if you were to exclude, in fact, the impact of GLP, it would normally be about 7.8%. So clearly, there has been an increase in terms of consumption of anti-obesity products. Clearly, because of the kind of advertisements that you see on TV, on airports and stuff like that. So clearly, there's a lot of visibility going on, and that is, in fact, setting the expectations as well.
Ramesh, I understand it is absolute nascent stage to understand with regards to market share. Talk to us about how big this portfolio will be for Lupin going ahead, because Lupin has entered into a semi-exclusive co-marketing agreement with Zydus as well for the Indian market. So how big could this portfolio actually become for you?
Clearly, we are pretty big in the anti-diabetes space. So we are amongst the top 3 players, and that sets the expectations really. I appreciate the fact that it's a pretty competitive market, and I would imagine that there'll be more than 40-50 people, 40-50 players, who would actually be entering the market with this drug. So clearly, there is going to be very high level of competition. I would in fact expect prices also to drop anywhere between 3,000 to 5,000 rupees. And I think the market, would be around 1,500, but eventually grow to much larger figures. But as you would also appreciate, there are a number of other drugs which are also, coming up. There are more than 40 drugs which are in the making, essentially going on to dual receptors, to triple receptors and the like. And clearly, that would actually expand the market.
Right. Mr. Sharma, as a CDMO player, how long is this opportunity window for you? If you could highlight us for that, considering you'll be manufacturing this product.
So, as you're aware, there are a number of markets which are opening up now. In fact, Canada, which is the largest market outside of US, is patent already expired in January, and now in the next couple of days, a number of other markets, large markets, will open up, including the likes of Brazil, India, China, Turkey, Saudi Arabia, and so on. So multiple markets. A significant part of humanity will will have potentially access to semaglutide. But while this is the start, the patent expiries will continue in phases. In 2028, the next phase, which is the European Union countries, especially Eastern Europe, will come off patent. Then towards end of the decade, Western Europe, and then later on in 2031, 32 will be US. So so this is, as I said, in multiple phases. This is a multi-year opportunity. And as I said, this is just a start of that opportunity. And we at OneSource, that's how we have doubled down. In fact, the capacities which we have built and we continue to add to are being put in to service this multi-year opportunity.
Understood. And also, Mr. Ramana, do you see this as a blockbuster opportunity comparable to the past generic waves or something fundamentally different?
You see that when it comes to GLP, this has been a very important category, and the way in which it has taken off because of the benefit that the product is able to give both for diabetics as well as for obesity. So definitely this is a very important product. Have presence in multiple markets. So Dr. Reddy's being one of them, we expect that this is going to be a meaningful opportunity for Dr. Reddy's.
And Ramana, with 50 plus Indian companies that are expected to launch, how intense will that competition be? Because you already have seen the innovator who's already slashed prices. So what will differentiate winners? Speed, scale, and doctor reach.
When it comes to what will differentiate the winners, I would say 4 elements. One is, are you able to have the fully integrated manufacturing capabilities, because this is a pretty complex product? Are you able to offer the same product both in India and internationally, the same one product, one quality? The second, I think, is the footprint in India, in emerging markets, and in Canada to take this product forward. The third is the way in which we would be able to support the patients as well as the HCPs in terms of how this product can be used. And finally, of course, how are we ensuring availability of the product across all of these markets at affordable prices? So these are the 4 elements, I would say, and hence it would be a meaningful opportunity should you be good in all of these four issues.
Okay, so that's with regards to, who is going to stand to win in all of this as well. But, whilst we actually talk to all of the players, Sayan Mukherjee, who analyzes this space pretty closely as well, joins in. Sayan, welcome to the show. Always a pleasure to speak to you. Your initial assessment when it comes to the GLP-1 portfolio and the kind of benefits a generic player would see, and with innovators slashing prices when you're talking about a semaglutide, will that be a double-edged sword? How are you looking at this entire gamut?
Yeah, thank you. We are looking at it in a very constructive manner. We need to keep in mind that the innovators, Novo or Eli Lilly, haven't really serviced the emerging markets, including India, adequately. I mean, these products came to India just around a year back. And by the way, Eli Lilly's tirzepatide is already hitting more than 100 crores of revenue a month. And therefore, I think within a very short period, we have seen a good pickup. So the opportunity for generic companies is actually to capitalize on a market which can expand meaningfully as prices come down. And by the way, the innovators themselves haven't really serviced that market well. So in that sense, this is a very large opportunity which can unfold given the size of population that we have in India and various other emerging markets. And as you know, this product has meaningful clinical benefit when it comes to diabetes or cardiometabolic disease and obesity in general. So we are looking forward to this opportunity, starting with India now when the patent expires, but also in various other 80 odd markets which are opening up for generic company. So notwithstanding the price cuts that we may see, it can at the margin be positive for the sector.
Got that point. Well, hi, Mr. Mukherjee, Varsha, this side, pleasure to have you. Who is better placed in India? You have partnered player, or you have fully integrated player, you have CDMO companies also. According to you, who is better placed when it comes to India in semaglutide or, overall GLP-1?
Yeah, so actually you're right. Bit different because it's a drug device combination. It's an injectable, an auto injection product. So therefore, there are players who would be supplying the device. There are, and the pharma companies don't manufacture the device. So it's a mechanical device. So there are set of companies who would benefit from there. Injectable plants are not readily available. You need injectable plants which meet the standards to produce this product. So therefore, the CDMO companies who would be doing the fill and finish job would be a beneficiary. And then, of course, you have the marketing companies, which are the generic companies who would be marketing this product in India and various other markets. Genericization, everyone in this chain would benefit because I think there would be enough demand, and also the growth would be quite significant. So whether you have integrated players like who are doing their own manufacturing, and the ones who are doing just the commercial front end or marketing, they will all benefit in the initial phase, particularly when we are looking at emerging markets, because this would be the branded markets, right? So even companies which have the commercial front end and may not be vertically integrated in terms of manufacturing, of course, they, for them, a part of the value is when the generic market, the regulated market opens up. So if we are talking about US and Europe many years down the line, then I guess so. To start with, I think it should benefit all players who are part of the supply chain.
Okay, so Sahan, benefits should pour in, but what happens in terms of pricing is what we need to see. Stay with us. We'll just quickly look at what that revenue generation so far has been as well for the innovator. Let's look at a Novo Nordisk. $26 billion is what they've garnered from Ozempic, and Wegovy, and this is data as per 2024. Eli Lilly has got around $16 billion from Mounjaro and Zepbound. So this is the revenue contribution that they've seen if you have to look at the GLP-1 portfolio. And very quickly, in terms of price sensitivity, the innovator price has been around 15,000 to 25,000 per month, and they're expecting a 50 to 60% lower price, which is coming down to almost 5,000 weekly is what you're talking about in terms of the generic companies. To add to this, India, as we know, is a very price-sensitive market, and the generics are expected to explode the adoption in terms of where consumers go. So that's what we're looking at overall. So the final patent expiry price crash is what we should be watching out for. Let me take this question with the management of OneSource as well. Are you seeing any pricing pressure as more CDMO players are entering?
So, our point is very clear on that, that we as CDMO are still a small fraction of the total in-market price. And, our pricing is very, very market agnostic. Whether it is India or Canada or Brazil or any other market, our pricing to the customer is based upon volume and is tiered on volume rather than on the market. Having said that, because we are really invested into this business, we have also worked out, and we continue to engage with our customers, how we can increase the scale, for example, increase batch size, which would increase the efficiencies, and we would be able to share part of that efficiencies with our customers to continue to make them competitive. So that's the That's the model which we have with our customers, that if they work efficiently with us on expanding, increasing batch sizes, we will certainly make sure that they remain competitive as long as they are in this field.
Right. And Mr. Ramana, continuing on the pricing strategy, just wanted to understand, as far as my knowledge, this will be a volume game. And also wanted to understand, will GLP see better margin than traditional generics, or follow the same trajectory? Just wanted to understand the pricing action and the pricing strategy or sensitivity when it comes to semaglutide overall.
Sure. So, Varsha, what will happen is, this is not a small molecule. This is a complex peptide, and hence you would not see the kind of pricing that you would see normally when a small molecule goes out of patent. Having said that, the pricing that you would receive or you would be able to get not just in India, but in emerging markets and Canada is going to be different. So as a company that has ability to market the products in many of the emerging markets, we expect the realization in several of the emerging markets would be better than what you would realize in India. But overall, India would support in terms of volumes. And similarly, I think as San was talking about, that there is a significant amount of unmet need. So you would see that there would be different markets playing at different prices. India would be competitive, but then if you have a good spread of presence, not just in India, but in other markets, you should realize good margins over the next 2 years.
That's with regards to company views. And let me take your closing comments when it comes to the price erosion that we're expecting or pricing pressure that we're expecting. And apart from that, in terms of the manufacturing capabilities as well, who would you prefer in pecking order if you have to look at the Indian markets? Who stands to benefit?
So, on the pricing front, clearly in India, what we would expect is somewhere around 4,000 rupees kind of monthly price to start with. And as volumes pick up, we could expect the prices to come down over a period of time. And, the volumes will grow significantly by then. So what we are actually forecasting is by, let's say, fiscal 30, when the market matures in terms of volume and in terms of stabilizes in terms of pricing, the Indian market could be close to $1 billion in terms of value. So therefore, I think it's a market which will be quite significant for most pharma companies over the next 5 years or so, in terms of supporting growth in the domestic market. And this is just India. And then, of course, there are markets outside of India. So most of the stocks that we covered, I think from an Indian market perspective, would be beneficiary. We have already seen a bunch of approvals. Lupin and Torrent tying up with Zydus for a special device. So all these companies are, quite interesting and should benefit from this.
Right.
Which possibly can be, addressed before others come into the market. So from an international perspective, I think we may see greater impact for the markets.
All right. Interesting comments that we've picked up from someone who analyzes the industry and from someone who's actually at the helm of it as well. But thank you, Sayan, Ramesh, Neeraj, and Mr. Ramana for joining us on the show. Always a pleasure to speak to you, and great insights I'm sure the viewers have picked up as well. But completely out of time on this special edition on India's GLP-1 moment from Varsha, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
All right, team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your automate.
HDFC Bank CEO time chairman Jagdishan says the exit comes as a surprise and there is no grave concern regarding the designation. Maintains that HDFC Bank is strong and stable. Market snap its 3-day gaining streak to end in the red. Nifty closes slightly above 23,000 after breaching the mark intraday, marking its biggest fall in 11 months. The Sensex plummets over 2,400 points. Amid geopolitical situation, Brent trades above $112 per barrel as crude prices jump 5%. U.S. Treasury Secretary Scott Bessent says U.S. will be using Iran oil to keep the prices down and U.S. unsanctioned Iranian oil that's on water. Iran dealt massive blows to oil refineries and energy facilities in Gulf countries, targets Saudi refinery on the Red Sea, setting Qatari LNG facilities and 2 Kuwaiti oil refineries. Meanwhile, PM Modi talks to Sultan of Oman, Malaysian PM, French President Macron to discuss Middle East conflict. Government announces 500 crore rupee relief package for exports in 3 parts, focusing separately on exporters that are already insured, upcoming exports to the region, and on MSME exporters not insured by the Export Credit Guarantee Corporation. Government confirms that Russian oil-laden tanker Aqua Titan is en route India. It is expected to arrive at New Mangalore port on March 21st. Maharashtra ushers in the new year with vibrant celebrations of Gudi Padwa, marked by colourful rangolis and traditional rituals. Hello and welcome viewers. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. This evening, we begin with focusing on HDFC Bank and the resignation of the chairman of the board. The blue chips bank stock ended over 5% deep in the red today. And this is in reaction to Atanu Chakrabarti's resignation from the board, serving as non-executive chairman. In his resignation, appointed the old hand of HDFC, K.K. Mistry, as the interim chairman of the board. M. Nagaraju, DFS Secchi, commenting on this, told us that HDFC Bank is a strong institution with strong Shakeup Jagdishan, CEO of HDFC Bank, on Chakrabarti's exit. Listen into some bits from that audio interview.
The developments of yesterday decided to move on. I think that was a little bit of a surprise for not just me, but for the entire board. Obviously, we've had a very constructive relationship over the last 5 years. It brought in a fair amount of intensity in terms of various aspects in governance, which is something that we have taken away rather positively, and therefore we insisted his continuation. I'm keen, that's number one. But having said that, there is a fair amount of robust and a very transparent process which is undertaken by the Nomination and Remuneration Committee of the board, and which will then recommend to the board and then post that to the regulator for approvals. As of now, I don't want to sort of second guess any of these authorities. I would like these authorities and the processes to take forward in the manner that we would like as a great governance company.
For more details on the resignation, RBI's response and the way forward for the bank's leadership, I'm being joined by my colleague.
Development is that Atanu Chakrabarti, who was the non-executive chairman of the board of HDFC Bank, resigned. With a strongly worded letter, we made two important points which sent alarm bells on the question of corporate governance and transparency in the bank. In his first statement, he had mentioned that his values and ethics are not in congruence with that of the bank, and the second one, that the merger benefits have not been fully fructified. Newly appointed interim chairman, K.K. Mistry, who's been an old-timer at HDFC, came with the word of support for the management as well as this institution to recoup the confidence that this particular resignation letter had really cast. So K.K. Mistry in his statement said that his values and principles totally align with the bank, and therefore he has taken up this particular role in the interim. The next important aspect over here to watch out for is also Shakeup Jagdishan as the CEO. Will be closely watched for the leadership stability in the bank, HDFC Bank, and that is what is going to be closely watched as well. But many of the market participants and brokerages have really also sounded off the alarm bells in terms of the governance or the concerns that really were festering behind the scenes, which really caused for Atanu Chakrabarti to really finally call it quits. What's the way forward? To be watched out for after 3 months, who's going to be the chairman of HDFC Bank, and second, Shakeup Jagdishan, whether he's reappointed as the of the investor concerns that were seen in the public market. They did come out and say that there are no imminent concerns. There have not been any governance issues that have been raised, and that No liquidity concerns. Remember, Reserve Bank of India has been consulted on the matter and they will continue to engage with the banking regulator on this matter going forward. But the big challenge for the present CEO of HDFC Bank will be to regain the confidence of all the stakeholders, considering that a large part of their stake is held, over 45% is held by the foreign institutional investors, and how the bank really maneuvers, gives certainty and also gains the confidence in coming days will be watched very closely.
Thank you so much for explaining that. Story to watch out for, because the bank stocks have already plummeted, and it would be interesting to see how they maneuver this particular period of transition. But focusing on stock markets, they snapped their 3-day losing streak to end in the red, while the Nifty breached 23,000. The Sensex plummeted over 2,000 points. HDFC Bank's downward slide pressured the benchmark the most, with Bank Nifty settling with around 3% cut itself. Broader markets lamented in sync with the benchmarks too, with both the mid. Let's get in my colleague Mahima to explain all the stock-specific moves today.
Right, so overall it's been a bloodbath for the markets today. Nifty has fallen over 3%. 23,050 odd levels, but the pressure continues, the volatility continues, and the VIX indicates that. Now overall, if you take a look at how the day has been, it's has snapped its 3-day gaining streak. Shriram Finance and Eternal were the top losers on the Nifty 50, losing over 6% ground. And of course, HDFC Bank, being an overweight, did of course play its part. That is ONGC. Broader markets also fell equally, slightly better in terms of where the benchmarks go, but the small cap 250 ended over 2.5% lower. Aegis Warpark as well as JBM Auto were the top losers on the small cap 250, both down over 6%. The mid cap 150 was down over 2.5% as well. Petronet LNG and Hindustan Petrochem were the top losers in the mid cap 150, both down over 7%. All sectors of course ended in the red. Nifty Auto, worst performing sector, fell over 4% in trade today, snapped its 3-day gaining streak. Ashok Leyland and M&M were the top losers on the Nifty Auto. Realty was the other top loser, losing over 3.5%. Godrej Properties and Signature Global fell the most and snapped its 2-day gaining streak as well. The other sectors, the Nifty FinServ, Nifty Bank, Nifty PSU Bank snapped their 3-day gaining streak, and Defence, Pharma, Oil red second consecutive day, and FMCG ended in red for the third consecutive day. So this is the overall view. The volatility continues, and the VIX kind of indicates that. We'll have to wait and watch out for. And as analysts are saying, be cautious with regards to where the markets go.
Thanks so much for wrapping the market action for us, Mahima. But the key overhang on the Dalal Street, in fact, stock markets across the world, $113 per barrel now, and the over 5% upshoot is mostly triggered by the strike on the world's largest natural gas south powers that Iran shares with Qatar across the Gulf. WTI crude has surged close to 1% as well, trading anywhere between $98 per barrel. As per reports, among the first to bear the brunt of boiling oil prices here in India are state-run oil marketing companies whose marketing margins have come under fallen nearly 10% in the past 5 sessions alone. Most of these stocks are in fact hovering near their 52-week lows, marking deep volatility as well as weakness in this space. But meanwhile, the government is planning to launch a new relief package called Relief, RELIEF, under the Export Promotion Mission to support exporters hit by disruptions in the Middle East. DGFT Chief Love Agrawal announced this today in New Delhi, and the scheme has 3 parts that have been allocated different amounts. But before we get in my colleague Rishabh for all the details, let's listen into DGFT Chief Love Agrawal.
अपने मीडिया फ्रेंड्स को कि जनरली ये माना जाता है कि ECGC कवरेज इज अगेंस्ट primarily against non-payment after goods are accepted. बट अगर हम देखें ECG's कवरेज डज नॉट ओनली कवर दैट, इट ऑल्सो कवर्स कॉन्ट्रैक्ट रेपुडिएशन, यानी कि अगर बायर एक्सेप्ट करने से मना करता है तो चाहे वो रीसेल हो, री इम्पोर्ट हो या डिस्ट्रेस सेल हो, उसको भी कवर किया जाता है। वॉर रिस्क हो, चाहे कोई हॉस्टिलिटी हो और उसमें वह प्रोसीड, एक्सपोर्ट प्रोसीड अगर इफेक्ट होती है उनको कवर किया जाता है। ट्रांसफ़र रिलेटेड रेस्ट्रिक्शंस हो तो उसमें पेमेंट डिलेज हो या मॉरेटोरियम हो, उससे भी कवर किया जाता है। और मुख्यतः डाइवर्जन ऑफ वोएज हो तो शिपिंग our exporters during this period, sir.
Viewers, I'm now being joined by my colleague Rishabh Bhatnagar, who will break down what this relief scheme is. All the details for you, Rishabh.
Pretty catchy name for this relief scheme that has been put out by the government. This essentially has three components. The first one has been allocated roughly 56 crore rupees. Under this, what you have is exporters who already have ECGC insurance cover. Those are covered under this. This is the smaller part of this very large package. What you're seeing is that the second component ensuring that over the next couple of months is when you'll perhaps still have this situation, this geopolitical situation continuing. This component is what will enable exports to still go out and exporters to still not feel the pinch of increasing war risk surcharges and other sort of charges that have come as a result of this geopolitical that have that either will leave India or have left India between March 16th and June 15th. So 3-month long window for this one. The third component is the largest one. Do you have this one has a cap of roughly about 50 lakh rupees per MSME. So you have some sort of a capping there that has been put out by the government to ensure that more and more exporters can get the benefit for this sort of a scheme. What we're seeing is that there's also an enhanced coverage under ECGC that the government is footing the bill for. So ECGC provides a cover of roughly up to 80 to 85%, but with an additional 10-15% that the government is footing the bill for, you have cover that is expanded to 95%. So those are the basic contours. The total scheme allocation is roughly 500 crore rupees. So not a very, very massive scheme that has come out, but still a very, very timely scheme under the export promotion mission by the Commerce Ministry that has come out.
Viewers, according to sources, government is working on further relief measures for exporters in finance and the banking space. EU FTA is expected to be ratified by the end of November, while GCC, Israel and Oman FTAs may see some delays. And there's another crucial update on WTO meeting. Sources tell that India will attend the WTO's MC14 meeting in the coming weeks, given the geopolitical environment at the moment. We'll break that all down for you, and here's my colleague Rishabh's report answering all those questions.
Right, what sources are telling us about India's March exports figures is that it will take into account the entire sort of impact that the war has had on the exports that are leaving India. The number is set its very ambitious $1 trillion target for when it comes to the overall export figure for the fiscal year. What we're also picking up as a result of this current geopolitical FTAs that India was in talks with, those talks will stand delayed. The ratification and the final sort of entry into force of the Oman FTA is also something that is delayed. Parliament for ratification that could come into force very, very soon. That is roughly by April end is when we expect the EIF or the entry into force for the UK FTA. What we also expect is that the EU FTA that was also agreed upon between both the sides, that is also set to be ratified by the end of November. Another very interesting development on the trade front is India's participation at the WTO MC14 in Cameroon's capital Yaoundé. That is slotted for for March 24th to 29th, you'll have the Commerce Minister Piyush Goyal, as well as the Commerce Secretary leading India's delegation to the African country. What we have on the agenda is that there will be some sort of a pathway that will be WTO needs a lot more strengthening. You have the rules-based system that has gone completely for a toss over the last few years, and the WTO really needs to sort of pick up that is expiring post the MC13 meeting for 2 years. You also have the Investment Facilitation for Development Agreement. That is something that a lot of countries have agreed upon, but as well as the G33 meeting that India will be a part of. So a whole host of issues that India is set to bring up at the MC14 in Yaoundé.
Viewers, as part of the government's regular interministerial briefing on the energy situation, the centre reviewed fuel supplies and LPG availability. Officials say crude supplies remain stable while LPG distribution continues to be closely monitored. The government once again sought to allay concerns over fuel disruption. Petroleum Ministry Sujata Sharma said refineries are operating normally and overall supply remains adequate, though LPG continues to be an area of concern. Meanwhile, a Russian crude-laden tanker chartered by Mangalore Refinery and Petrochemicals is on its way to India and is expected to dock at the new Mangalore port very shortly. Shipping Ministry officials say the vessel, named Aqua Titan, is carrying crude oil supplies, a point reiterated by Special Secretary Rajesh entered its 20th day with fresh strikes, rising casualties and growing risks to global energy supplies. Turmoil in international oil and gas markets has intensified. In the biggest gas hub, Ras Laffan, in Qatar, Iran fired multiple missiles at Tel Aviv, damaging buildings and killing a foreign worker, while warning it will continue targeting oil and gas facilities across the Gulf if attacks on its own infrastructure continue. While earlier US President Donald Trump said Israel would halt further strikes on Iran's South Pars gas field, but also warned of severe retaliation if Iran targets energy sites in Qatar again. Concerns are also mounting over shipping through the Strait of Hormuz. Iran is planning a law to charge ships for safe passage through Hormuz. On the other hand, military planning is underway among Western allies to ensure safe passage for commercial vessels, and there are reports that the United Kingdom has sent military officers to the United States to help draw up options to reopen the crucial choke point. Gulf leaders held an emergency meeting in Riyadh where several Arab nations condemned the strikes and urged de-escalation. In fact, Prime Minister Narendra Modi has stepped up diplomatic outreach amid West Asia tensions, speaking with Sultan Haitham bin Tariq and Emmanuel Macron, stressing de-escalation, dialogue and safe navigation through the Strait of Hormuz. And viewers, the United States is striking a confident note amid the ongoing conflict. U.S. Defense Secretary Pete Hegseth has asserted that Washington has clear objectives in this war, underlining that the strategy remains focused and well-defined. He also emphasized that the U.S. is not acting alone, pointing to strong backing from key allies, reinforcing a united front in the conflict. And perhaps most notably, Hegseth also said, "We hold the cards on this war," signaling a position of strategic advantage and control as tensions continue to evolve. Let's listen in to his remarks from the recent press briefing.
We have objectives. Those objectives are clear. We have allies pursuing objectives as well. And the truth speaks for itself. I mean, President Trump was very clear about that. Iran has weaponized energy for decades. Israel clearly sent a warning, and POTUS has made it clear, very clear. Which is the only thing we hit. We can hold anything at issue. Anything. The United States